All
Here we
right. Good
are.
morning, everyone.
Hello. Good morning. Good morning, everyone. How are we doing? Good to see you all.
Good, good. How are you today?
Doing well, mate. Doing well. How about yourself?
Good stuff.
Going strong.
Yeah, good. A little bit tired. I'm
That's fair.
yeah. This Claude code. It's everything I'm thinking about right now. It's yeah,
It's all Claude code. You're just lost in the
yeah,
source with Claude.
yeah. I'm lost in the matrix. It's incredible. It's incredible what I'm building. I'm all you
It
know.
is. It's
I'm
good.
It's incredible. It's gonna be pretty cool. And now I'm set up a something called the funny thing is, like, I don't even know what this, like, what all the things is. It's just I'm basically just asking Claude, like, okay, how can I improve this? It's like, oh, you can use this and that. I'm like, I have no idea what that is. Could you guide me through how to set it up? And it's like, yeah, sure. And now I have this, like, super advanced setup where I have a web server connect, like, everything's automated, and it's just it's pretty cool. And I set up this MCP server, which is supposed to, um, because when you have a Cloud Code session, it tends to, when it runs for a while, it tends to get slow, and there's a lot of information in the chat, a lot of context
The
that it has to
recall.
go through. Yeah, so what I've done now is I've set up an MCP server, which is going to track everything outside of Cloud Code. So whenever I automatically pick the context from that new server, so I don't have to explain once again what I'm working on. So I figured, instead of just throwing myself in and building a product, I'm going to first build out an infrastructure that I can use with Cloud Code to make the whole make everything more efficient when I decide to build something.
That's good. That's good. Now you can see how Mike got onto all of this and has just
Yeah,
gone down. You go down the rabbit. Once you start, you go down the rabbit hole, and you just keep going. You're like, oh, this is
yeah, it's
amazing.
insane.
It's good. It is really good.
But I have been working with ChatGPT to create stuff, but that was quite simple, like creating indicators for trading view and things like that. But in the last few months with Claude, it's something different.
Yeah.
Now you go from creating, visual indicators to, basically what I have now is, um, you can see if I can. I don't want to show you the URL and everything, but I can, because
You're
it's
you're
not,
on the
again, it's
verge of
not.
doing more, yeah, more like in-depth data, sort of almost quant type stuff, delving
Yeah,
into
so
that realm per se.
I can show you the dashboard that I have right now. So this is just a web interface, normal dashboard, and it's collecting data in the background right now. So currently I got 30 million candles, 1 minute candles, collected in a database for 13 symbols. And you can see right here, I can view. I have imported indicators, so that in the background it's going through this data with going through these indicators and the data, trying to find patterns. And then I have a signals tab where the AI is spitting out signals based on the pattern it's finding. And then I have the import data. I can a full crypto data and the full forex data. And as you can see here, right now I'm on the phase 4. Actually, I'm phase 5 with. So it's pretty cool. I've built up the interface in a way where I don't I want basically, I told Claude Code I want to code as little as possible and do as little technical things as possible. So I want everything to be a visual interface. So when I click a button, a script will run that you've created in the backend. So it's
Mm.
literally no code at all. So I go in, for example, I click on the admin panel, and then I have all the script that Claude has created for me and all the API calls and everything that has to be done manually. I can do that on the back end with just going to the URL.
Mm.
And now I'm developing the AI pattern analysis phase. But for this, I've had to install the MCP server because this is such a big project. It's I already have like 50 commits to the GitHub in like one day. So yeah, it's a really cool project I'm working on. And what I'm trying to do here is, so in the in the short term future, I'm looking to take on one specific slot in the live stream where I'm going to be live every day, and then I want to create a trading session out of that. So outside of my swing trading, I want to like, okay, so these 2 hours, I'm going to create something where I'm just going to be trading for that 2 hours. And this dashboard here is what I'm going to open, and then it will have everything I need basically. So I don't have to go to different tabs in the browser, use different tools. This is going to give me everything. So I follow, for example, when it comes to macro analysis, I have certain services and newsletters, and I'm going to redirect all of that information and have Claude automatically pick up everything, put it into the database, and then a few hours before my session starts, it's going to collect all of that and then provide me with a summary in this dashboard.
Yeah. Because that's what I was going to say. There's some things I was going to talk to you about this. Just like some of the stuff I showed you, where I was collecting that kind of data long before AI or LLMs were a thing, right? So
yeah,
I think this is very interesting. This is a good project, and I would be curious to ask you a few questions on it at some point.
yeah, definitely.
I think there's some crossover stuff for sure.
What I'm
but to
thinking
you
is
guys in chat, I think the important thing is that everyone can do this type of stuff to assist your trading. And if you guys are not using this and trying to, enhance your edge with this, it's right in front of you, right there. And it's just like Jonatan said, very simple to do. You can scrap that together. Definitely take advantage of that right now, for sure.
Yeah,
yes,
definitely. It's a huge. What I'm building now and my vision for what I want to build might not be possible with the current technicals, but I know that in 6 months it's probably going to be possible, and in 2 years it's 100% going to be possible. So I'm building the infrastructure, and then when Claude Code becomes better, I'm just going to be able to build what I want. And then if maybe Gemini or ChatGPT is going to become better, well, I have a GitHub, so I have everything on GitHub. I can just connect whatever AI is state of the art right now and just let it analyze the GitHub and starts running and building that. And parallel to this, this is so cool because we talked about yesterday. We talked about how SaaS business, software as a service, it's just dead. Now everyone can build their own software. So this weekend, I have this deal with my fiance. She plans all the meals and she buys all the groceries, and then I cook everything. Right? I love cooking, and she I guess she doesn't love planning and buying the grocery, but it is what it is. So she this weekend she's like, oh, I'm not really sure what we're gonna be eating on Thursday. I'm like, you know what? Because I have a huge library of recipes, right? Because she has these apps and she's like kind of go through it and picks the recipes, right? And then she sends that recipe to me. So in my phone, I have a huge library of recipes, like several hundreds, right? So I thought, okay, I will just ask Claude Code to create an app where she can go in and just press a button and it's going to randomize. Well, not completely randomize. It's going to give you like a week worth of meals, recipes, and what to buy for those recipes. Just click one button. And then you can also select if you want to repeat something from last week, or if you have a favorite they want to keep,
Can
or if
go
you
in
want to.
the rotation.
Yeah. So it's like, yeah, it's just crazy. And that software, I mean, we would have bought that if it
There's
existed.
companies out there right now that people are paying $60 a month or whatever for that right
Yes.
now, and you can just create it yourself.
Dude,
And
people still pay
yeah,
a personal trainer for nutrition advice and things like that.
yeah,
Like, it's stupid. You can just go to ChatGPT and tell them, can you give me a week worth of recipes, and no meal is going to be more than 500 calories? And it's going to be like, yeah,
yeah,
sure, here. And people pay for that, you know?
yeah,
Dude, we live a very exciting and also scary
yeah.
times, I believe.
There will always be a personal touch needed for people, because sometimes some people need that extra, thing to get them across the line, that kind of guidance, that kind of thing. But if you're, I mean, as many of us are here, obviously trading, you're probably more self-oriented, right? You're more self-directed, more entrepreneurial in that aspect, that you can build these things for yourself across the board: health,
Yeah.
fitness, trading, finances, managing bills, tax, whatever it is. Just like Jonatan was saying, build apps, all that kind of stuff. Take all that time out. You've now put that into a refined process. And stuff like trading, you can now spend more time doing that than wasting time on, other bits and pieces.
Yeah, it's seriously impressive what's happening right now.
Yeah.
What I'm building is I'm not looking to sell it, and I'm not looking to charge for access, because I know that someone seeing this service, they can just send the URL to Claude Code and ask it to create the same thing, and
Yeah,
in
the
a few
same.
weeks,
Yeah.
yeah, in the same in a few weeks to have the same. So, what instrument are they using? Are we talking about tools for creating, or are we
So
talking about trading
yeah,
here?
this was before, when you were talking about the AI. Like, what AI
Yeah.
tools are you specifically using per se?
So I'm I'm
I'll put
I'm
you up there.
I'm paying for Claude Max, which is, I think, $100 a month to get. I'm at like 25% of my weekly limit. I never really hit my daily limit, and I never really hit the limit. And I use Claude Code from it's actively working in the background. It's coding right now, and it's doing a lot of things, writing thousands of lines of codes in a few hours, from 8 in the morning till 8 in the evening. So for me, it's worth it, because I'm creating something that is truly useful for me. And then I've paid about $20 for the web server and the databases, and I have to upgrade the database as well, because I need probably like 30 gigabytes of price action is going to be in the databases. And then, of course, I'm going to have the Anthropic API as well, and that's Anthropic is the creator of Claude, and I need to connect my API from them to the database, so I can use Claude to actively analyze that, and that's probably going to be a little bit expensive. Um, but it's also a cool thing. I enjoy building this.
Mm.
I mean, for me, what we have right now with the current coding capabilities of AI, it's like a dream come true for me, because ever since I was like a kid, I've always dreamt about is building
Yeah.
things and creating things, building companies, building products, and I've tried to learn how to code, but never had the patience or the time to really get into it. But now I can really create anything I want, and so for me, it's I'm like a kid again. Like, I remember when I was
Yeah.
like 15, I was sitting with laptops, trying to be these cool hackers and coding programs. And back in the day, I was friends with some of the guys who created the Pirate Bay. And if you guys know the background on
The
that,
old
they
Sweden.
are pretty, yeah. Uh, And they were pretty, hardcore hackers. They managed to get into Nordea and things like that back in the day.
Yeah.
I didn't do anything like that, to be honest. I had no skills to do that, but it was some fun times. Some of them
You
went
just
to
want to make
jail.
that clarification. I wasn't part of that. I didn't have the
Yeah, I
skills
was not.
to do it.
Yeah, I was not part of that.
They didn't invite
But
me,
yeah, so
so I couldn't do it.
exciting times though. Some of them went to jail, and some of them turned
Yeah,
out to be really, now they own huge software companies, and it all
yeah. I was
started.
gonna say, but just final thing. So I think I'm gonna say black. Look, I'm just gonna say sugar. I'm just gonna say sugar, if that's all right. It was, I think, yeah. So basically, the commented that when you brought up the dashboard of what you've created, so that was fully through Claude Code, though, right?
Yeah,
So
definitely. Yeah.
yeah. So that interface was purely through Claude Code. So you guys can do that today, tomorrow. This is the kind of stuff that you can start implementing to track your trades. Even developing a more sophisticated like personal journal, that kind of stuff as well.
Yeah.
Plus potentially integrating things to give you signals, etc., based on your trading approach or strategy, right? That you can start to code into that, and even for assets that you're not typically watching yourself. So you can start to tell it to look out for a cross border of assets that you don't typically always analyze. It will find similar setups per your approach that you've instructed it to look for. And then obviously it'll give you those signals. The next thing is always, of course, to actually go and check and make sure. Don't just blindly, go and take that. But those are the kind of things that I know specifically this past week we've had some of you guys asking a number of questions where you're doing really well with your trading, but it might just be on one asset or during specific times, and you want to you've been really solid with that, but either expand to other assets or more of the same style of trading within the same asset. And then that's going to depend on how much time you have to actually sit in front of the screen observing the market in real time, or if you can build something that will give you those inferences outside of that on its own, automated, and then you can come to the market once you get those pings and then determine whether it's actually fits the plan, fits the strategy, fits your structure, and then take the trades. So I think
I
that's
have actually
it's a really good way to do it.
I have just a simple way of analyzing the data. So I have I'm going to show you. I have a part of this website here. If you look at I have one. I just wanted to experiment with what Claude could do, or what the. I'm gonna open up here. So I just wanted to experiment with what type of questions can we answer through only going through the statistical analysis of the data without involving any AI agent. So the AI agent is going to be just a window on the website where I basically ask questions, ask whatever question, then it goes through the data automatically to find out. But this is just simple statistical analysis, looking at the numbers without really involving any AI. And this is on Bitcoin. I tried to do an experiment, and here we can see through the last, I think it's 2,000 days or 1,500 days, we can see that if Saturday, if the Saturday candle closes bearishly, there's a 60.7% chance that the Sunday candle will be bullish. And it's simple statistics like this, where if you connect a lot of simple statistics like this, then you can find a pattern. So you can say, for example, okay, so there's a 60.7% chance that the Sunday candle will be bullish if the Saturday candle closed bearishly. Now, right there, you have an edge. So if you buy on Sunday open, but there's much more to go into it. What's the max favorable exertion? How much does it go up, and things like that. But just here, you know that if you follow this for the last 2,000 days or 1,000 1,500 days, whatever, you would have had an edge here. And then you can add to this. You can add things like, if the Saturday bearish candle was a bearish engulfing, then what's the statistic? And maybe you'll see that it's smaller. But what if the bearish candle was actually a pin bar with a lower wick? Then the statistics might be higher. So things like this is very simple, and you don't really need a AI agent to analyze this. You just have to give it the data, and then it has to just analyze once, and then there you have it. And these are the questions that I'm trying to answer. So, for example, seasonality data, we don't need any tool for that anymore. Like seasonality data, it's simple. That's easy, you know. And we can also we can add indicators to this, right? So let's say if the bearish Saturday close was above or below the 20 daily EMA, what change does that have to the statistics? So this, to me, is a very simple way of analyzing price action to find patterns. And but then there's more advanced way of doing it. It's basically what I'm trying to do here in the future is basically tell an AI agent to basically go out, look at this data, and tell me what you find. And just let it do whatever it thinks is best to do, and let it think for me, basically.
Yeah, to find the best possible trade setups or systems out there, right? But even on the example you gave, right? If you got a 66% probability, that's what it was, wasn't it? 66.
Yeah.
Like you just run a 1-to-1 on that, you would be making money. Simple as that.
Yeah, and
then just like you're saying, you add like a second parameter, might be like the ATR. When that happens, what is the general ATR? That would now allow you to give, rather than just a 1-to-1, you might go, typically when that happens, the ATR actually is like to whatever, this degree, which might allow you to run a 2-to-1 or 1.5 or whatever degree that is. And then now you're not just making money from the base stat, you're making great returns off a second derivative component, right?
Yeah. And here's another thing I did, and this is, I basically just asked Claude Code, and I asked it, come up with your own questions. What type of patterns do you think is good to look at here? And it gave me this hourly patterns. And here's shows me for Bitcoin that the hour between 8 and 9 has a 54.5% probability of being bullish for the last 1,500 days. Now, if you add that, okay, so let's say Saturday closed bearishly. We know that it's a above 60% chance of Sunday closing bullishly. What if this is true for that as well? So then you should buy Bitcoin at 8 and sell it at 9 if on a Sunday, if Saturday closed bearishly. And what if that's all I have to do? One trade a week.
That's it.
Yeah.
And then you can code it to do that you don't even have to run the trades yourself.
Yeah.
You can code the trades to run on their own, right?
Exactly. And then you ask it, cross-check every weekend with major happenings and geopolitical news, and look at the win rate for that. And if it shows that it's significantly worse, then you know that, okay, there's a possibility of unforeseen things destroying the edge, and that's where it becomes difficult. And then, of course, what I'm looking at also is, would I be able to create a backtesting engine on this that does proper Monte Carlo simulations? And I don't think it's impossible. I think it's because it's just mathematics, and Claude is very good at math.
Claude is very good. Perplexity, very good as well. So that would be the other AI tool that I would cross compare with, because it's specifically built for a lot of math and also financial analytics that we'll pull that into.
Yeah, because Perplexity is sort of a AI search engine, right? It kind of, and I'm thinking that is probably the AI that I want to insert for news and macro and things like that.
Definitely.
But this is, I mean, and I just can't stop thinking about the fact that I'm building this. Now imagine what JP Morgan is building or has already built.
Exactly. And they're light years ahead. They've been doing this for a long time. They pay people many tens. It's just not singular millions, tens of millions, and multiple people to all brainstorm and spend all day thinking about this, putting it together. Yeah, I think it's both a benefit and a definitely a little bit scary, knowing that obviously we've had algorithms, these kind of like certain people who have done very well in the market doing this themselves from raw brain power. Now you have a assistive tool on steroids to amplify those people that already have the brain power, the knowledge, the understanding, like you're saying with coding, as an assistive. And it is pretty wild as to where this will actually go. I don't know where it goes in 5 years. Maybe markets get kind of smoothed out. It's going to be very hard to trade because everything is perfectly arbitraged out. Who knows? But for the time being, we're in the early stage. I think the main thing to say is to use it to your advantage while you can, before the future goes to wherever it ends up. Right?
Yeah,
I think that's the takeaway.
and
We've had these conversations many times. Don't want to get into that again. I'll probably do it properly at some point, but it's very weird where we are now. Who knows where we are at 2030? AI is taking over. Everyone's on universal basic income. Who knows? But right now, definitely for you guys out there, use this to your best advantage. So,
we talk a lot about this, about the future of what the world is going to look like in 1, 5, and 10 years. And then we have a lot of people in the comments saying like, "Oh, it's not as serious. It's not going to change the world as much." But I think people who say that are simply not as invested as us and has the knowledge at where AI technology currently is. All you have to do is, pick up a book about the current state of AI, and you will understand that what we're living through right now is the most world-changing technology that this world has ever seen, and it's going to create a place that is unrecognizable to what we have right now. So very, very interesting. But let's move on, because I need to switch focus. Otherwise, I'm gonna have a breakdown here. I need to think about something else. We had a question. We had a question on. First of all, approximate date for future launch. The date is decided. It is going to be soon. That's the date. It's going to be soon.
Very soon.
Yep.
It's a crossing the T's, dotting the I's type situation. As you guys have probably seen, it's on the dashboard, that kind of stuff. It's very, it's just the final icing on the cake that needs to come.
We also have coming up, we have the Fivers celebrating 10 years. It's going to be our 10-year anniversary, and maybe it's going to be coming around that. I don't know. Maybe. It would be nice if they launched at the same time, though. Something to look out for. And I think that's going to be 1-2 months from now, something like that, is what I'm thinking personally, but I don't know. I have no idea. Okay, I am a swing trader. Yes, how much risk do I use per trade? So it's a good question because I'm still experimenting with what the best risk per trade is for my long-term swing trading, because I sometimes find it that 1% is too little to make any meaningful amount of money on my personal account. 1% can be a little bit too much on my funded account, because what you have to do is you have to look at, like, it doesn't really matter if you're a swing trader, a scalper, or a day trader, whatever, what you have to look at is there's just really one metric that matters here, and that is the max drawdown of your system. So if you backtest your system, if you're a discretionary trader, then you go to TradingView and you pull up the replay tool and you go through, I would say, 200 trades. Now, if you're a swing trader, it's going to be a lot of trades on a lot of pairs over a long period of time. But you need
Many
a large
years.
number to have a statistical significant number. And the first number you usually talk about when it comes to system development is 50 trades and then 100 trades. But I would just say go with 200 just to be safe. And then when you have 200 trades, you look at the max drawdown of your system throughout those 200 trades, and then you take that max drawdown and you double it, and then you take whatever your desired risk per trade is. You take that times your max drawdown doubled, and that's your risk per trade. And doing this, it means that not only are you safe from the drawdown of your system, you're also safe from a lot of mental errors and things like that. So you can have double the max drawdown of your system without losing your funded account or without going too deep in a drawdown. Because there's this magical level with the drawdown. If you come lower than, like, I think it's 20 to 30%, you're gonna have a very difficult time getting back to break even. Because if you lose 50% of your account, you need to double your account to get back to break even. And if you lose 10% of your account, you only really need to make like 11% back. Yeah. But if you're down 20, that increases like 25 or something like that, even 30, I believe. So the deeper the drawdown, the more difficult is to go into back to break even, and you're digging yourself a hole that you're not going to be able to get out of. So that's the reason why you see professional traders risking way less than what you learn to risk when you first start trading. And then, of course, you have the traders who once or twice a year they see a trade and they go all in, because we're all humans. And I know some big traders who are tilting way more often than they would like to admit. So
so I think I was just going to say, I think the same way that compounding positively works for you, and that's exactly what you want. Just like Jonatan was saying, as you draw down, compounding will work against you as well, obviously, right? So all of trading is very much a double-edged sword. And so personally, as far as myself, I often swing trade, as I know some of you guys know, some of you may not. I do very much a broad basket of trading, some primarily intraday and scalp, right? And then primarily intraday and swing trading, and then occasionally scalping when it's ripe, put it that way. So I think the other portion, rather than just running a flat percentage that you're going to risk every trade, the other thing is to really critically think about, is this trade genuinely like a plus setup, an A setup, A minus, B plus, B minus, etc., and then sort of dynamically adjust that proportion within that relevance. The other thing we're trying to critically evaluate that sentiment is you're going to have to take another step to say, is this really the greatest trade that I've seen? Or do I think it just kind of looks good? When you have to take that secondary thing of applying a dynamic risk evaluation to the trade and go, oh, it's not really an A plus, it's actually more of an A minus, B plus. And you might go, instead of 1% or 1.5%, I'm going to put 0.6 on this. Because even though I really like it, I want it to happen. It looks good, but it's not quite there. And it starts to give that critical evaluation to your own thinking, your own evaluation of the market. And the more iterations of you critically thinking at each point, critically thinking again and again and again, will refine the process. It's almost like having I know, very, very expensive alcohol, right? You go through various portions of refinement, right? Where it's distilled, distilled again, distilled again, distilled again, distilled again, until you get a perfect product. So the same way you want that with your trading, to distill it through multiple layers of refinement to actually get a firm outcome. And the more times you can do that, and obviously you got to make it in an efficient manner, that's not going to be too slow and jarred up, you will see better results overall.
Yeah. We have someone asking about gold, and honestly, there's not much to say about gold. It's trading in price discovery. Now, I would say that something going into price discovery, especially gold in current environments, is probably a good investment to buy. I don't think gold is necessarily too expensive at these levels, but as a trader, I'm the type of trader who I'm looking to get in on the higher lows, not the higher highs. And what I see here for gold is it's likely that this is a local high, just as that was a local high. And but then you look at the break into new all-time highs, and I mean I don't think we're gonna get that. But if we look at it from a daily perspective, I mean, to me the most obvious level for retest is previous all-time high. Um, Going into the 4-hour, we're looking at that level, I believe. There's also a little gap here on the 1-hour, could potentially. So I think this whole region right here is probably my best bet for a good trade. Could even move it down here. So it's a pretty big area, but this is what I'm watching, and it makes a bit of sense on the daily as well, because if we do add some fibs here, we have the 50% sitting around that level as well. So if we get a pullback down to this level right here, I'm probably just going to go ahead and buy gold, because I feel like it's I feel a little bit a little FOMO here, like I'm being left behind. I would love to go into a trade where I have the stop loss around 4,000, somewhere below 4,400 or at 4,400, that I would have that stop loss. And then I just want to open a long position here and hold it. I
Was
like
going to
gold.
say, yeah, this sounds very much like so myself and Dirk were talking about this extensively yesterday, right? So this is what we were explaining on the stream around using the 2 standard div indicator through here. So as I mapped out with this yesterday, your general expectation is probably that we've hit those kind of 2 standard divs. This moves with current price action. So as you can see, we've come up again, touch that, we've come off. You probably want to look for a bit of consolidation above the break of the high. Look for it to come down towards the 2 standard div negative, right? So this is obviously the midline through here. So that's +1, +2. That's -1, -2. Now, look for some consolidation around here. Once you start to round out that broad spectrum, then look for buys for us to rally. That, or if this consolidates for a bit longer, these will start to expand with that consolidation and will become more tilted to a bit more sideways, right? And expand sort of like through there per se, like that, if that makes sense. And then you would look through towards to buy at the peak of there, finding some local structure on a lower time frame for a further rally. We were also talking about this yesterday as far as the time expectation. So you can see this might be all the way until Thursday before you actually get an entry. That's one of the other nice things that the 2 standard div chain does give you. And potentially out to here, it could be upwards of, if you get extended consolidation, towards Monday or Tuesday next week before you get that build off that level. So there you go. I feel like that's kind of a good entry criteria. And yeah, if any of you guys missed that, I'm sure many of you guys were here, but if you missed it yesterday, check the live stream from yesterday with myself and Dirk. We're talking about this for quite some while. And yeah, we're both in very much agreement that, yeah, great way to position a trade. So there you go.
But one thing I'm curious about also is it might. That's the thing with gold. It's like Bitcoin. It tends to, and that's where the FOMO comes from. It tends to just either it overshoots the level or it doesn't hit the level, and then it just continues. Very rarely do you have a perfect retest of a level on gold. And when you have the perfect hit, it's like, yeah, it just overshoots or ranges for a long time. It's difficult. I do think gold
Yeah.
is best traded on like the 4 hour or the daily, but the swaps might become a problem because if you look at this
Yeah, we
retest
also
right
talked about that. Yeah,
yeah, because
exactly.
you had like
Yeah.
1, 2, 3, 4, 5, 6. They have a week of swaps just before price moving after your entry. So you kind of have to look up the swap costs on prop firms and your personal account if you're going to be trading gold that way.
Yeah,
Intraday,
hence
obviously.
what we were saying is you'd rather wait until you see that consolidation, some kind of movement right to the end -2 derivative on the standard dev chain, right? And then look for an entry. So you avoid those costs, right? Or at least minimize them to the best capacity you can. And we're also talking about how it, at least in recent times, it has had a lot of that impulsive movement, almost like Bitcoin. But we're also talking about that, saying that from here, the degree of market cap that gold has to go up starts to get larger and larger and larger and compounds to such a degree that it will naturally slow down from here, right? The only way that you get that expansive, aggressive movement, just like Bitcoin, is from speculative trading. And then this goes back to silver, just like Unbiased Trader was talking about here. Because we had this last time on the deck. We're like, no, dude, don't short silver just yet. Don't do it. Don't do it. And we were having a bit of a laugh, bit of a meme about this. I don't know if you're actually still in it or you're still just trying to, you know, feel the flames with it. Because surely you would have jumped out by now, my man. But yeah, so same deal. We were talking with silver that you get the speculative push, just like on silver that we've seen it go, almost parabolic, right? Almost just like a meme coin or something else. So if you get rid of the standard dip chain and look at that, like this thing is ridiculous. And the resultant of that comes from that speculative element, not from like core buying, from like real participants, hedges, commodity driven players, whether it's, I don't know, solar panels or mining or anything else, right? The excess of this comes very much from that speculative participant in the market. So banks, funds, hedge funds trying to make a couple dollars. So it's always, we were talking about yesterday, it's very important to understand the participants in the market that are making up the price structure and price action, especially in some of those commodity markets, which are far less, there's far less volume, far less activity versus like a major currency like euro dollar, pound dollar, Aussie dollar, any of the majors, that kind of stuff, right? So you're going to have much more sensitivity to those large speculative leveraged plays. And you shouldn't have confidence unless you have the backing of the raw component players in the background as well. So there you go.
All right, I have another trade open
now.
as well. I just want to show you guys. I have Euro GBP. I entered this one this morning. So the idea here with Euro GBP is we have type of price action I'm looking for when it comes to let's see on the higher time frames. I'm looking at this level as an important level where, at least from this point of time, if we're looking at that level, we've had good support and kind of persistence around this area. Some price action here telling me that it's still an important level. We got resistance, 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 and then we have that weekly like around the top. And I've been looking for I've been looking here on Euro GBP quite a long time, and I looked for a trade last year, which was this one right here, where we had this break and retest of that trend line. So I missed that one, unfortunately, because the move here from that level was a bit messy. So I missed that one. But I remember saying back, so this is last summer, and this is, if you're going to be a swing trader, you have to put yourself in the mindset of really thinking long term, which is, it's very, very different from intraday trading, because when you're trading, because when you're trading intraday, you're getting into the market and then you're getting out, and you don't really really care about, right, you don't really
what
care about the
happened last week,
context.
what happens 3 days from now, it's irrelevant to you.
Yeah. But when I'm looking at this, and I'm looking at this move all the way up here, it's still July, still summer last year, right? And I said, okay, well, to me, this is an obvious level. Like that level, if price starts moving lower from somewhere up here, I remember having a level here and saying, if that level breaks, I'm going to short it down here. Price broke out, it's almost like USD JPY. You're waiting to short it, and then it breaks out. But then eventually it starts coming down. And how long did it take?
Don't get me started on dollar yen, all right? That's the worst. Okay, we're not going down at all. Okay, there's no down path. It's all just up.
Yeah, but how long did it take? It took me like almost 6 months to see what I wanted to see on EG. And now today, I went into the daily and I started looking for confirmation. And I wanted to eventually, I wanted to first see a retest of that level. We might still see a retest of that level. We might see a retest of this level before it really confirms. But the fact that it's to me, this is a almost 4-hour trade. So it's very much worth taking a few losses on this idea before seeing it starting to move. So on the daily, I'm obviously viewing this as the confirmation, right, where we have price coming up into what I view as resistance, and then seeing a rejection, having a fairly wide stop loss of 51 pips here. But if we come up and hit that stop loss and then start moving lower, I can simply enter this trade once again, and then I can have the stop loss above here. And I'm looking to take this down to this region, because this is the trade I wanted to take last summer, where we had sort of an inverse head and shoulders type of pattern that kind of looked like this, and then it broke out like that. And I want to, because price never really retested this level, but I think it's a very important level for price to retest, and that's going to be this level right here. Last time we had a significant price action down here was in June last year, and I'm just seeing this as a potential. Like we got the uptrend right here, and then I'm viewing this as sort of a break of structure, and I'm hoping we're gonna take it down there. But yeah, it's gonna be a long trade, and I have to be careful with the swaps here as well. If it's moving too slowly and there's too many swaps, the issue I had with AUD NCD trade, which I'm still in on my personal account, I had to close that on the fivers, because I think it was I held it over Christmas and New Year's, which created just unnecessary amounts of swap.
Right. Okay. That's fair. The only thing I was going to say, when you're taking a trade that long, because obviously you very much do technicals, like CMT too, but you also have that interest in fundamentals, right? And obviously over that period, surely you would have to take in some kind of account with that, or potentially you say, I don't care about that. I'm just looking at the overall structure. Because then something like euro pound, I would question, do you think the forward prospectus for the euro or for the
So,
pound is better as far as a macro fundamental outlook?
so when it
Yeah.
comes to macro, the only real reason, so I'm only really interested in the fundamentals. Whenever I try to apply it to my trading, it's always been I see the things that I want to see in price well before I can see the confirmation in fundamentals. And if I'm in a trade and I exit that trade based on fundamentals, sometimes I see that price is not respecting those fundamentals and I exit too early or too late or whatever. So when it comes to the fundamentals, it's more about me getting to understand how the markets move and how the financial world is working, and also try to position
Mm.
myself for my long-term investing. So my investment portfolio, basically, how am I
Yeah.
going to structure that, and when is it time to perhaps exit the S&P 500 because I'm seeing both the fundamentals and price action agreeing on a potential recession happening. But that's not, I can't do that in trading because the S&P 400 might have dropped significantly in price when a recession is starting to confirm itself. And if that would have been a trade, it would have been a bad trade. But as an investment,
Mm.
I'm okay with losing out on 15% of gains on S&P 500 if it means not holding
No.
through a 2-year bear market, right?
Yeah.
But as a trader, I'm trying to use to follow price because I feel like I'm not at the level where I've had any success with the fundamentals. Um, and
Yeah,
and
they
it,
are.
it might,
Macro is very hard to nail down the timing. That's completely
yeah,
fair. But that's what I was asking as far as on those longer structures where you are potentially going to have to hold swaps. And I guess as far as euro pound as an example, um, obviously we all know here, I've talked about it many times, that the Brits have had their troubles. They still have those troubles ongoing. And then so potentially though, you could build an idea around that fundamental macro type picture that's very much already in the price. It's been done. We've had that. It's all fully priced in. So typically once something's priced in, even if technically it's still really bad, price goes back the other way because it's being priced in. So it's like a position of least resistance, right?
yeah,
And then as far as Europe right now is very neutral. So this is why I was wondering if you would consider that, because at least the Europe side of things is very neutral at this current uh, time. So the primary portion would be to consider where the Brits are, where the pound is. Is that fully priced in, and now we're reversing as we have seen on the pound dollar? You're going to see that further in euro pound. Or because the euro has been very neutral, it's primed for something to come out of left field. It could be either positive or negative that drives price the other way, because that's the other component. So I just thought it was an interesting thought when you're holding these longer term trades, because it is typically something you have to take into account at least, or you just go purely technical. Hence the question.
yeah. I'm mostly when it comes to like I said, the swing trades is mostly technical. But one of the reason why I'm also trying to understand the macro picture is to see, am I trading with sentiment here? Am I trading with what looks to be? But the thing with price and fundamentals can change rather quickly. Like there can be a significant shock to the system, which and that can happen at any time, right? And then it can start a new trend or whatever. And that can, of course, happen in price as well. So I very much see price and fundamentals. What I like about price is there's not really much to think about. It's just you view price and it is what it is. There's just, this is the
Makes it very
price.
simple.
Yeah, it's very
Yeah.
simple. So this is price history, this is market structure, and it's very raw. It's very simple. When it comes
And it goes
to
back
Mac,
to what you were saying when you were analyzing the statistics, when you were talking about the stuff you're doing with AI stuff, right? You don't need to know what was going on technically, right? You just know
yeah,
this happens this many times over this many periods, and you can then price something out mathematically going forward that it should replicate, and then you can build the AI to tell you if somehow that relationship has broken down, and then you can change it. But you could do that without knowing a single thing about the market and do it. So I guess
yeah.
that's kind of what you're saying. And then you get into fundamentals, macro. It's very difficult. It takes a lot more extensive work, all that kind of stuff. It's an absolute headache, and then it's very hard to also get it right at the same time, right? So
Yeah, and I mean, I went through also in for the two macro, it's research, and going through their research, it's almost like they're doing technical analysis, but on macro numbers. It's
yeah,
such an extensive
it's quant
research.
stuff basically. Yeah,
Yeah, they're looking, and I'm like, that's interesting, and I would rather pay an analyst to give me the conclusions than to do the analysis myself. But when it comes to technical analysis, it's the other way around because I actually enjoy
yeah.
doing the technical analysis and coming to the conclusion myself. But when it comes to the fundamentals, I'm happy to pay someone to do the work for me because I
Not
don't want to
not
be
only
saving
that,
money.
if you tried to do it yourself, it would cost to get that kind of data. Just like I've took with Dirk in the past, it will cost you hundreds of thousands of dollars to get that data, and then you have to
Yeah, because
synthesize it and actually make something out of it. So that's just the foot in the door to actually get the proper data, and then actually make something out of it is another question. So
because I
yeah,
think they're
definitely.
using
I agree.
Bloomberg and the London Stock Exchange Group thing that they're having as well, data analytics. So it's like
And
we're
all
talking
sorts of private companies that you know gather other bits and pieces, very like raw, niche, obscure bits of data, that kind of stuff as well. Yeah.
yeah, it's a lot of definitely a lot of work. All right, let's see. I
Um,
think we have gonna have Pedro coming on soon. Oh, look at that!
I was going to
Exactly.
say,
I said I just mentioned Pedro, and then it's like boof pops up like
I was going
magic.
to say before Pedro jumps on and before you leave, so I don't leave Pedro alone. Can you give me like 2 minutes? I got to let my partner into the building, if that's all right. We'll be back.
If
Sorry.
locked her out. I forgot about it, but the part I locked her in this room here. I gotta let her out. Oh, interesting. Yeah, yeah, yeah. How many swing trades you take except in expect in a month? Well, this is Euro GBP is the first trade I've taken this year. So it's been 13 days of the new year, January 13 days. So I would say probably I don't know, with the way I'm trading right now and the markets are moving right now, probably one or two trades a month. But it depends. It can stop moving. I mean, I remember this summer we had probably 5 to 10 trades a month for 3 4 months. So it's a lot of action. But usually, on average, I think I would say two. If you spread it out through the whole year and yearly average, maybe 2 3 trades a month. I think. But still, I'm also like I'm not super profitable doing this. Or I'm profitable on paper, but it's like I'm not making a lot of money because I'm not risking a huge amount of percentage of the account per trade. Because based on my average drawdown and my max drawdown, I can't be risking too much. I don't want to be losing the trade, the account. I mean, and because I'm not risking too much per trade, and I'm taking few trades on percentage wise on the account, I'm not making a lot of money. Let's say so for example on the Fivers funded account, I'll make about $800 on this trade if it turns out. But how long will it take? So let's say it has taken okay, so we have a price range of let's say 200 pips. Um it took from that high down here 200 pips. It took about 35 bars or 35 days, and it so it might, this trade might look something like this. So this trade alone, I'll make $800 in 35 days. But then let's assume I take another trade that is going to be a loser, and I will lose $200 on that one. So in 1 month, I made $600 on that funded account. That's that's not a lot of money. If I would be day trading and I would be taking the same amount of risk, but I would, instead of taking 2 to 5 trades a month, I would be taking 2 to 5 trades a week or a day. Well, then you can take that 800. I mean, it would probably be 4 times as much. I would probably make maybe 3,200 in a month instead. And that's why day trading and active trading is much more difficult, but much more rewarding. You're going to make much more money trading actively on the lower time frames, because you're going to have maybe the same statistics, but just a bigger number of trades. Welcome, Pedro. How are you?
Jonatan, good morning, everyone. I'm good, man. How are you doing? That's a good topic.
Yeah, I'm doing good.
Between swing trading and day trading, that's an interesting one. It has its advantage and disadvantage as everything. For example, if you do take this trade that you are in on euro pound, and you don't do anything else, you don't even need to look at it anymore. That's it. That's time that you win, and then just let the trade play out. On the other hand, maybe you need to spend 5 hours in front of the charts every day to try to scalp. Yeah. And maybe then you can make mistakes. And then in a bad day of scalping, you can maybe have a massive loss, destroying or giving back all the profits that you maybe make for a week. It has it's not easy both ways, and it's easy both ways. We'll see.
Definitely. No, it's the time that I spend on trading isn't a lot, so I can obviously do other work outside trading. Make money that way as well. It's all about the what you're getting for the time you're spending, and in swing trading, you have a lot of time for other endeavors as well. Anything you've been trading, Pedro?
Not yet. I'm still looking at the US indices, especially NASDAQ for a potential short. We'll see if we get there. If you finally get there today or this week, then the N pairs, something that I'm paying attention as well, as they continue to go up. I think eventually we may have some shorting opportunities. I was just looking at your chart in here, but the NASDAQ that I've been looking and waiting since last week, wanting price to go slightly above all these highs into close to 26 or around 26. To see if there's any kind of opportunity to short from around this level. Yesterday, we did manage to take slightly the top. Hopefully, that's not enough. Hopefully price does want to go a little bit higher. Maybe today with CPI, who knows? But the reality is that I'm going to try to see if there's any short opportunity from there. Otherwise, price may actually just continue to rally. So we had this clear... is it wedge, triangle, whatever shape this is? Price broke to the upside, retested it, and maybe wants to just continue to go to all-time highs. So that's also one of the risks for my potential short opportunity from here. But I'll try to find something to trade within this range. And then the N pairs. The N pairs, I think, are the ones that also are on my radar. So the N index, as you can see, just continues to fall. I think today we had the finance minister of Japan starting to worry. And I think as the dollar yen continues to go higher, I think we're going to have more news from Japan worrying about how high it is, or kind of how expensive it is, looking at the dollar yen. So again, getting to 160 levels, I think that's going to be a lot of pressure on the yen, and maybe we can start seeing some selling. But so far, not yet. And I did learn, I think it was not last year, but 2 years ago, that just trying to short the yen because it looks like it's expensive, it can be a bad approach. We need to be patient on that because it can continue to go higher for longer than maybe we think. And that did manage to have a bad week like 2 years ago, trying to continue short the dollar yen. Yeah, so the dollar yen is one of those, euro yen as well, pound yen. So I'm going to be looking at the yen pairs eventually to look for reversal opportunities because I think there's going to be a lot of pressure from the BOG to not let price go much higher than it is right now, at least 160 on the dollar yen. So those are some of the pairs that I'm definitely looking at, and then I'm trying to look at pound dollar, which I think we can still look for more shorts opportunities. Maybe still within last week's high, or even if price goes a little bit higher, around 136 or something like that, I'm still considering potential shorts on the pound. So I have two levels that I will be looking at. This is a potential Quasimodo pattern around this here, but if price does want to go a little bit higher, I'm still also happy with that to try to short eventually the pound dollar from there. So that's how I'm positioned at this point. The main pairs that I'm looking for at this point. Yeah, I think I'm trying to do a little bit more like you, trying to go into a bit more swing. I mean, trades that can last maybe a week or something like that, and not so much into intraday. That's how I'm trying to approach these years.
Yeah, I think it's a much more relaxed type of trading for sure. You just need to make sure you're making money basically, like consistently, because I feel like if you're swing trading and you're holding the position for too long, I'm almost in the realm of position trading, because you have Griff, for example. We're gonna have Griff come on in a few hours, and he's gonna be talking about how he's a swing trader, but he's trading the 1 hour, right? So he holds trade for a few days, maybe a week or longer, but he's not going to be holding trades for months, and I'm holding trades for months. So I'm almost more into the position trading and investing type of swing trader. I'm a very long term swing trader, and I would say that if you're someone who has a 9 to 5 job, you don't have a lot of time to trade, then that's great. But you can't expect to make a lot of money unless you're risking a lot of money doing that. And then if you're risking a lot of money, you run the risk of just losing everything. So it's the thing with trading. If you want to make a lot of money in trading, you have to be actively trading, and that's very difficult. So if you're going to be making a lot of money in trading, if you want to be making a lot of money from trading, you have to accept that there's no easy way of doing it. There's very few. I mean, when we talk about like big professional traders, there's very few swing trading professional traders like me that is making a shit ton of money doing that and doing it full time and only trading. If you're trading like me, you're probably running another business. You're doing something else. Trading is a hobby. It's not just your profession. It's more like something that you're doing on the side. The people that make huge amount of money in trading, they're doing so full time. They're spending a lot of time researching, looking at charts and everything. And they are not going to be holding a forex trade for 2 months. It's
Not
just
FX. Yeah.
What?
Like stocks, yeah. Not FX. Stocks, yes, maybe. But then, just like you were saying, in the downtime, you're doing all that research for the next trade or updating the current trade, etc. So it is very much a contact job, like you were saying.
Look at JP Morgan. Like, who has
Yeah.
where are the best traders in the world? Well, probably in places like JP Morgan. JP Morgan makes money from their trading operations. They always make money. I don't think they have a losing year. they rarely have losing months. They make money. The traders who trade at JP Morgan, they are not holding trades for 2 months. Their trading operations is highly sophisticated. It's active trading, and they're making a lot of money. And you're not going to get a job as a trader on at JP Morgan if you're like, oh yeah, I take 2 trades a month. They're like, we don't care about that. We want people taking 2 trades a day, not a month, because they know if they take a person that has the same statistics when it comes to return to drawdown ratio, if you tell them that I take 2 trades a month, they're going to be like, okay, so you make 2% a month. And there's another dude comes in and says, I take 2 trades a day. Oh, you make 15% a month based on those statistics. They're always going to go with the active trader, So but so if you really want to be, if you want to become a full-time trader, you want to make a lot of money from trading. Swing trading is a great way to learn how to set yourself up to understand the overall dynamics of the market and trade with the high time frames. But eventually, you will have to go into lower time frames.
I think that's the thing to say. You can do both, because just like you're saying, almost like position trading, like you'd have stocks over many years, but you're going to be holding. You don't really, don't have to modulate that too much. It is a long hold, but you will be doing other things near term or in shorter time frames to take advantage of the market, right? Same reason that all these banks, hedge funds, wherever, they have employees. Their employees turn up to the office in front of the computer every single day, and they sit in front of the market. It's because, yes, you do have to be very active in the market.
Yeah.
Right.
And that's also because if they don't show up and they do the work and they are relentless in the way they look at the statistics and everything, then they're just going to replace it with someone else who has that drive to do that. And those are the people.
Exactly.
Those are the people that we're trading against. Okay. Those are you're trying to get money from. It's a ruthless, brutal market out there, and but that's also one of the reasons why I'm developing the things that I'm developing, because you guys know that I've tried to trade the lower time frames, but I simply can't. I simply can't do it. So what I'm developing here is, with Cloud Code and everything, I'm developing this dashboard. It's basically something where I wish I had when I started trading. I've also developed something called Tilt Guard, which is something that I wanted to launch it as a standalone product, but then again, everyone can create it with just a prompt. So I'm just going to integrate this into the dashboard, and basically what it is I track my mental state of mind on a daily basis, and if I go on Tilt, there's an EA connected to MetaTrader that's going to shut down the account for 24 hours. I'm not going to be able to trade on it. And I'm going to connect it to my, I think it's easier to do with CTrader, and I have IC Markets connected to CTrader that runs all the copy trading. So I'm just going to connect it to CTrader. I'm going to shut down my IC Markets account for 24 hours if I go on Tilt. And I believe that's what I need to be on the low time frames, because if you're trading with a proper like a prop firm, a traditional prop firm where you're in the office and you have your risk manager sitting in the office next to you,
he's like, what are you doing?
Yeah, they're going to come out and they're going to be like tapping on the shoulder, like, yeah, we're not giving you any more capital today.
Buddy. Yeah.
And you're gonna go in and start crying like, but I need 2 more trades. Like, no, you go home. Go home, spend time with your children. It's like, but I hate my family. I want to be here. I want to trade.
Give me more capital, please.
Yeah. Imagine.
It's fine. Don't worry.
Just a little bit more margin, please.
It's not margin, it's something else.
Your wife is calling you. She's wondering where you are. It's 4 a.m., dude. Go home.
You mentioned that they're going. How do you define when you're on Tilt? That you mentioned that if you're on Tilt, you're going to basically switch off all the applications. How do you define that?
How I found it? I created it.
How did define when you are on tilt? Like you mentioned, okay, if you feel that you're on tilt, everything else can
how do you say this is tilt versus this is not tilt? Like where's the threshold?
Okay, so this is actually very simple because it's kind of like I know I'm so aware of my emotions and all the mistakes I'm doing. Even when I'm doing the mistakes, even when I'm thinking about doing the mistakes, I know it's a mistake, right? But sometimes we just do it anyway, right? It's kind of like you're looking at the cake and you're like, I shouldn't eat more cake because I'm fat, and then you're thinking that while you're eating the cake. And you're like, I should stop eating this cake. You're saying to yourself when you're eating the cake.
Is this a personal issue?
And well, yeah, it is a personal issue. It's the same thing in trading, right? I'm trading lower time frames. Like, I shouldn't take this trade, and I've just taken the trade. It's like, oh, exit this trade. Nah, stop. Let's get hit. That's that's kind of like so. How do I define tilt? Well, I have a very clear structure that I need to go through to make sure that I am not on tilt, and it's basically just a questionnaire. So the first question: have you slept well? Do you feel like you've slept well? Are you focused? If it's a no on that question, then it's simply just do not trade, right? So if it's a yes on that question, go on to the next question. Have you meditated or done your like every day I go on a 30-minute walk, and I come home and I meditate for 10 minutes, and that sets me up for the day. If I haven't done that, I'm not supposed to be trading the lower time frames. The higher time frames are different, right? But the lower time frames I'm not supposed to be trading. So if I go through all these steps and it's yes, I go to the next step and I read through a certain sentences, like for example, every new trade is a completely random occurrence. There's a 50% chance statistically of this being a winner. Read through a couple of things that make sense from a probabilistic point of view. And then I go on to the next stage and I ask questions like that tries to answer the question, am I in a flow state of mind or not? And if any of these questions is a no, or answers to the question is a no, then I want this tool to simply just block me from trading for the next 24 hours. And then it's going to be tracking my trades. So if I have two losers in a row within 30 minutes, I'm locked out on the account. I'm not going to be trading, because I know from statistics that if I have two trades in a row being losers within 1 hour, there's a very, very high possibility of me starting revenge trading and over trading. So if I simply just create an application,
of like how you're deriving that is because when you're on tilt, I feel like everyone knows, like, you know, when you know, right? You know you're doing it, but then you keep doing it. And so just like you're saying, you've taken those back stats that you know that when this happens, it tends to continue. As far as the original question of like, how do you define the exact point of where that is? That would be an example. So you can go through your past trades. You've had great trading days. You've had some really poor ones. At what point on the poor trading days did it go from, okay, this is just a losing day, to bad, tilt, negative, blew an account, that type of thing, right? When it spills over to going beyond just a losing day.
Yeah, exactly. There's I think if we're talking about statistics, what you want to know is, are you trading according to the not the rules of the system, but the statistics, like how many trades on average in 10 minutes or an hour or whatever. Let's say you have a trading session of 2 hours. How many trades do you usually take, and how long is it between those trades? Is it 15 minutes? And then if you then see if the system sees that you've now taken 3 trades in 5 minutes, well, that's too much, too quickly. You need to take a break, right? And then to have a fail switch that automatically locks you out of your account when that happens, I think that's what I need, because that will create discipline and that will create a routine. You do that for 3 months, then maybe you don't need the system anymore.
Yeah, exactly. And then it becomes repetition, and it's in your background. You can do it automatically, and then that's once you've hit those levels of expertise, I guess, if you want to put it that way. Yeah.
Yeah, and that's all of that is I'm trying to integrate into this trading dashboard. It's going to be a big project, but I'm hoping that I'll have it up and running in a few weeks. Hopefully in time for us to expand the live trading room. We're looking to if everything happens according to plan, it's going to be huge. It's going to be massive. We are going to be expanding greatly, and then at that point, I would like to be more active during the London open session, the earlier hour of the day, and make that my own personal trading session as well, and then develop a system for the time specifically between 9 in the morning till 11, and then simply look at it. Also makes it easier for me to gather data, because I can basically just say to the AI, you only care about price action between 9 and 11 in the morning. Everything else you can ignore.
Yeah.
Cooked rice is good though. Anyway,
sorry, I'm
gonna jump off here before we go into another AI rabbit hole, and I'll be here for 2 hours just talking about how the world is ending, but we'll make a lot of money, before that happens. All right.
Cool.
Guys,
see you, man.
See you guys later. Take care.
See you.
Appreciate it, bro. Ciao. Pedro. How are we doing, brother?
I'm good, man. I'm good. How are you doing?
Yeah, good. Coming into the new week, I feel like last week we were saying we're pretty much on the same page as far as sort of scoping things out, gauging where to go next, etc. So, where are you with some of that stuff in general, or just how has this week started from your Monday? You know.
Yeah. So basically, again, just a brief said with Jonatan. I'm still considering shorts on NASDAQ if price provides a good opportunity around close to 26,000. Yesterday we finally slightly took these highs. Hopefully it's not enough liquidity. Hopefully price still wants to go a little bit higher. But it could be enough. It could be enough to have a little bit of a selling pressure. But I hope price still goes a little bit higher. Today we have CPI, which is usually it tends to be a high volatility impact news. However, when you look at the Fed and when you look at what the interest rates are and the probability of any rate cuts, I think there's no uncertainty at this point. I think after December's meeting, the path was clear, and the path is basically that maybe until April or even June, at least April, maybe there's no rate cuts to be expected. And I think that removes a lot of the potential volatility that you may have either for NFP. We saw it on Friday. It was nothing special. The numbers were actually kind of average at around the 50K.
Yeah. Which in this environment is good per se.
Like
By the by, have no problems, nothing wrong.
So there's no neither to the price neither to the upside. Yeah, it was kind of neutral, and even today with CPI. Again, we're expecting around 2.8%, if not mistaken, and I think even if it's slightly higher, but even if it is, I think even if it is slightly higher or slightly lower, I don't think it's going to have any big impact on the projections, especially for January or even then March, which means that there's not really any kind of uncertainty, which removes a little bit maybe the type of volatility that you're going to have in today's news, because usually NFP or CPI, they are indeed high impact news with a lot of volatility, but when that can almost have a direct impact on the next meeting or at least on the uncertainty of the market towards the next interest rate decision, which is not the case at this point, especially after what happened over the weekend with basically going after Jerome Powell. I think that's going to be that's going to be another
out there, right? That's the next thing we have to deal with. who we get as the next Fed chair, we don't still quite have that. Honestly, I would have expected it before Christmas, as we talked a while ago.
Yeah, there's some news about it that he was about to announce it. Yeah, but not yet.
Yeah. There's been a number of like false starts with that. So I think March might still be on the table, especially given what Trump has obviously pushed certain people in the DOJ to press against the Fed. That's pretty clear. So that might change the perspective for who he puts in as Fed chair, and then also trying to send a signal to other Fed chair members as far as their position going forward. Whether he does things directly, indirectly, or trying to pressure them with, lawsuits or something else, just to make their life difficult enough that they back off, right? That probably seems like the kind of way he's doing. Now, is that very democratic? Is that the right thing to do? I don't think so. It's not great. But I think March would still be on the table. I think we've got a lot of data to come through between now and then. I think CPI will come out a touch higher tonight, which is basically the economist expectation. So I think it will be pretty in line with that, right? And like you were saying, I think that's very much in the price, or if not in the price, basically it's not going to change the needle right now because there's too many other variables that have to come into play for it to actually matter, right? So I definitely agree with you on that across the board. But as far as the knee-jerk impact tonight, I wouldn't be surprised if, it's basically dollar positive tonight. That would be my
it could be
expectation.
That could be the situation. Like we could have maybe continuation even on the US indices. Again, and if the CPI comes a little bit lower, kind of around where it is, maybe continue to see it going to the upside, even if it is slightly higher. I don't really think that's going to be the catalyst to move the market down. I think maybe for this month of January, maybe the earnings season is going to have a bigger impact on the US indices than the macro data that we're going to have in terms of CPI or NFP or something like that. As Void mentioned in here as well. So basically, how the situation with Jerome Powell. It's creating volatility, but it's kind of because, of course, no one was expecting Jerome Powell to be speaking on the Sunday, saying that basically the government is after him, or Trump is after him in this way. But aside from that, nothing much is going on. So it's kind of a quiet market at this point in terms of data. Then, so something that was missing a lot last year, it was in terms of clarity towards to what the Fed was about to do in terms of interest rate. I think at least for the next 3 months, first quarter of this year, I think it's quite clear at this point, unless something really dramatic changes, what we're expecting. Of course, then there's going to be that volatility. Who's going to be the next Fed president whenever Trump decides to announce it? That can definitely create a narrative for the future. But before that, as long as the data stays more or less in alignment, one tick higher, one tick lower, nothing really is going to change. So how we as traders can use that information is basically maybe not expect that huge volatility that sometimes comes up into those news. So basically, if you're expecting some kind of breakout and prices to rally like 200 points or whatever it may be,
we're not getting euro dollar going from 104 to 117 this year. That won't be the case, right?
Yeah, not in just in one news event. Most likely not. So yeah, that's where we are. So we need to basically adjust a little bit the type of opportunities that you're looking for. Maybe, as I was mentioning as well, maybe some of that big volatility can come up from the yen pairs as we continue to go higher. Maybe that's going to be something coming up from the BOG as the dollar yen, for example, is approaching eventually the almost 160. It's already crossed 159. So that could be something to keep an eye on, as the dollar yen continues to go higher. So that's one. Then gold, of course, gold may continue just to rally as well a little bit with these somehow uncertainties that you might have, Venezuela or the Trump going after Jerome Powell or something like that, Greenland and stuff like that. So yeah, gold may continue to rally a little bit more, as well as silver for the time being. We'll see. Even crypto is kind of stabilized a little bit at around this, or Bitcoin at around this 90, between 85 to 90. Is this kind of accumulation for price to try to go close to 100 and eventually higher to 100? Or is there going to be any more downside on crypto, on Bitcoin in particular, eventually going back to 80s or 70s? That's a question mark as well. But for now, like in the last weeks, or at least last month, has been steady at around this level. It's actually slightly creating new highs without even creating new lows. So that's going to be interesting to see if we're going to have any kind of eventual momentum going, or price somehow is going to find new bearish moves. But this looks like a bit more of a accumulation than kind of distribution. Yeah, that's how I'm positioning, basically.
I agree. I think, I mean, just like we were talking about last week, markets kind of flat, no real directions, kind of a chop between here and there where we are technically, like we were talking about. I think that's the same deal right now. Same with what you were saying about any of the data that comes out. The part that diffuses the data is obviously going to be, we have a new Fed chair coming in. So whatever happens now, it's going to be somewhat, to a degree, irrelevant to the new Fed chair, right? They're going to be like, I'm coming in, going to make my own new regime of the collective here. And, you know, Trump's very much going to be putting it that way rather than like a independent board. So I think that's part why, even when we saw the stuff on Friday from Jerome Powell, coming into Monday, the markets didn't react that heavily. Because, I mean, how do you position that? Then also, coming into this month's data, how do you position for that? I think that's why I was saying I think March is still live, because I think they will, if the data comes through, that we do need either a further cut or something else like that. If it comes through, they will do that. Especially given, technically, if you take Trump, his bias is for them to cut, right? So I think the path of least resistance, data permitting, would be for a cut overall. So I think when it's almost like when we had the stuff just before the shutdown, and there was a 90% of no cut in December, and we were talking about how I think there should actually be a cut. Right now, we don't have the data, but everything forward is actually saying that the data forward will be in that way. I think we're almost in a very similar situation right now. We'll basically get there. There's tangential data going into Q1 that I think will be better for the US, which might be a headwind, just like we spoke about in Q3 and Q4. But I think those numbers will come down. Now, whether they actually cut or don't is another question. But obviously, the whole market looks at this, and therefore that moves the dollar in terms of those probabilities overall. So given we are at such a high probability of no cut, I would say the basis would be for a potential cut or the specter of a cut. And then hence you look at potential dollar weakness, given that front. Based on a trading basis, per you guys, us here, how you actually actionably play that kind of aspect.
Yeah. Because I'm going to look at the DAX in a bit. Someone is asking about the DAX.
Go for it.
Yeah, no, but because we're talking about the dollar, let's first look at the dollar, and then we continue. And also, Henry mentioned about, of course, the situation in Iran. Of course, that can be another geopolitical situation that could agitate the markets for sure. No one really knows how it's going to play out at this point, but we'll see. Trump hasn't stayed quiet, and it's not his style usually when he sees situations like this. So maybe let's see what he's going to do. But because of the dollar, so we actually mentioned that potentially could continue to see a little bit more dollar to the upside until eventually we have that scenario of maybe we have a cut in March if the data shows.
Well, it's the dollar chance of that happening.
Yeah, of course. But yeah, I could see the dollar potentially continue to move higher.
Yeah,
at this
I
point,
agree
last week I was expecting a little bit that I kind of mentioned that maybe price had already broken a little bit the structure and it could hold this level and continue to push higher, and it happened. It moved to the upside. Now looking a little bit more into the higher time frame, it could eventually continue to push higher. I'm still just a little bit curious how price is going to react to this week's high. Basically, the way price opened on Sunday dropped again because of that situation with the Jerome Powell. So I'm just curious a little bit how price is going to react from around this level. If this holds and price just kind of starts breaking this level again, then maybe we can challenge these lows or kind of could challenge this level. But if price just continues now to move higher and this becomes kind of the move now, I think then we start having a little bit more clarity on the dollar strength, and maybe we can start aiming even towards this 100 mark again from where we are. So that's the situation, because the dollar, that is the way I look at the market. I'm looking at this full range in here. Even though this level was really good, so basically close the gap, there could still be the option that maybe price would maybe come back into this level and then move higher again. For example, this low was already here and price was already making this move. I was a bit more bullish, expecting that price was ready to go towards this top. But because we kind of left this level still behind, and if price wants to do this, I'm not going to be entirely surprised or caught by surprise. And you just need to see exactly what price you do. And then you're just looking at the euro, it can be the same thing. I could see the same way that I could see dollar going up. I could still see potentially the euro continue to move a little bit more to the downside as well, closer to this level. So in that sense, it's a bit in alignment, even with the pound as well, which could also potentially push pound a little bit down, maybe in a different way. So yeah, maybe dollar could go a little bit higher in the shorter term. And I would be surprised with that. Yeah,
I agree. I think that's what we were talking about last week as well. I was saying, from everything we're seeing right now, as far as the technical price action, like we were talking about, it's dollar higher. Now, as far as the forward projection, I don't like that. Just like I was saying last week, I was kind of uncomfortable with that because that's what we are seeing, which is fair. But once you come into the full swing of trading, everyone's back at their desks, holidays are over, those kind of flows start to come in and markets start to restabilize as far as the true direction. Right, so that's another important thing. Don't take this past sort of 4 weeks through December into the new year as like gospel, right? Often that changes very quickly because you have low volume, low liquidity, low participation, lack of conviction, lacking data, obviously, through there. Then you come into the full swing of everyone coming back to their desks, as far as like hedge funds, banks, institutions, moves the market heavily with like true money, and then we get the full direction. So even looking at the chart right now, if we broke out above those highs, I would not be liking that. I feel like that looks very peculiar altogether. So hang on, let's we'll jump back to yours because that was perfectly right there. Right? Yeah.
Okay, sorry.
So, no, it's fine. So into that higher break area, I feel like
above the high,
like very much, above the highs. That looks like no man's land, right? And I can't see any reason for conviction for that kind of further drive in the dollar going forward right now. That's the trouble where we get start to get into that, and obviously with the further things with the whole Jerome Powell thing on Friday with the DOJ is that very much it's kind of as you know, they've gone with these sideways things because of the upgrade of investments to the Federal Reserve, real estate, whatever. The whole thing is because they haven't reduced interest rates.
Yeah, definitely.
So if he has made those measures to do that, obviously whoever is going to put into full charge potentially is waiting or has had to take longer to find someone that is actually malleable to drop rates very hard with that. and we're seeing proper like legal interactions that he is trying to place ahead of that to do these things. So you could actually get a potential large crash in the dollar and running right down to the bottom of that that range that you've highlighted. And given everything on the cusp, it seems as though that would be the most likely outcome overall, right? Versus, you know, dollar running higher, Trump's all of a sudden not being kind of weird. It seems like that's very unlikely, right? We will have the US data, which I do expect to be better, which will be the countervalence to this. But that is the primary aspect going through right now. So we'll see how it plays out in terms of timing, that kind of stuff. But I would, even at this point, I'm looking through January as being very skeptical as far as price action as a forward confirmation of future conditions right now. It might take until end of Jan to actually get the a reasonable confident positioning. Put it that way.
Yeah, and how that then, and put again the potential then cut on the interest rates and this approach that Trent may do as well. How that's going to affect then the dollar yen and the end situation and the carry trades on that aspect.
Dude, dollar yen. All right, at this point, I think I'm with Dirk.
What's his take?
Look,
don't touch it. Huh?
I will buy a heap of yen, and I will see you in like 5 years from now and see where we are. You know, like that's my time frame. Like we both feel like we've given up on this yen trade. It actually will come back to earth at some point. You've got increasing pressures.
Exactly.
But it's almost like one of those things when you have just before a major stock market crash, almost like say you take a GFC or the dot-com bubble where it goes crazy, and then it goes all the way to the floor. So right now we're getting more and more of those increasing pressures. You've had every reason for things to tank, almost like the GFC when you see mortgages, all that kind of stuff, people not paying them, all that stuff's crashing, and you're Michael Burry in the Big Short, and you've put those trades on in 2005, and then it happens in 2007, right? And you're just too early. But you're right, that's too early.
Yeah.
So that kind of to me is what it feels like with the dollar yen. Now, I don't think we're quite that duration as far as 2 years or something, because this has actually been going on for a long time before last year that we're talking about it, and now you've got some extensive extraneous squeeze components that will collapse it. There has to be those components then also come in. That's what we got last year with the JGBs as far as yields rising very, very aggressively. So right now, as we've seen, if we look at the dollar yen, it's still running up, right? And this also, the thing where this gets weird is because it is a part play that, as far as the US and the trade talks, having the yen very weak is very beneficial for the US, and it hurts China. And this seems to be the primary thing where those underlying talks have gone through, and there's been a willingness to allow the currency to kind of float around and do what it's going to do, versus hammering it. Whilst the political peoples, whether it be the BOJ, Ministry of Finance, that kind of stuff, have talked about certain levels where they don't like it above that, and there's been certain companies who have now become more vocal, which they weren't before, despite when the currency was up at that rate. But if they've now become vocal, it's probably because they have the back earrings of that coming in. And this is where you get very political, very macro, very whatever, with all this kind of stuff. But there is a bite point and I think we are coming up to that bite point overall. But it will be a situation of once the US has secured whatever their desire is as far as the trade deals, that kind of stuff, putting enough pressure on China, and then you can allow the currency to dump, right? Until then, they're going to be like, hey, we'll secure this trade deal. You got to keep putting pressure on China. As long as you do that, we'll hold up our end of the bargain. It's the same way when this started last year when Trump came in, and we were talking about one of the first trade deals to be done was potentially going to be Japan, and the asked very much is currency on the table, right? And they're like, no, we didn't talk about currency at all. Now, normally, if you didn't actually talk about currency, you wouldn't even respond to the question. But they've gone and said, yeah, we didn't talk about it, which always tells you that they did talk about it, but they don't want to talk about it.
Yeah.
Yeah. So that's why, I don't know, we'll see if there's a market structure. I'm now looking at this very technically because basically the pin drop for all of this will be macro. It will be something that we probably don't personally see. It will happen too quickly. I'll keep an eye on it. And then vault into it when I do see it. But I have sort of given up on this as far as
I can see
market operations, market fundamentals, operation, anything that makes sense. So I would prefer some of the other, side yen pairs that you often look at, like euro yen, pound yen, anything else like that. That's great. Aussie yen, great. Dollar yen.
I can feel your pain when you're speaking, so I can feel that. Now, yes, dollar yen can definitely be a tricky one, especially when you're getting to these levels. I remember, I think I mentioned before as well. I think I remember it was 2024. I think. I literally was 1 week.
It's like trying to trade the dollar yuan, like the dollar Chinese currency, whether you trade the offshore and the onshore currency, like. Very difficult. It comes down to these political things. It's not really trading. Right now, we have a very heavy influence of that political aspect, which is not under market controls. So I've given up on it. Anyway, go on. You can clearly see I'm frustrated on it. Get that out of here. Sorry.
But even in terms of even in terms of the timing, sometimes with the dollar yen, because I remember, I think it was around this time in 2024. I don't remember if it was around end of April or if it was this move. I don't remember which one of the moves. There was so much talks about intervention. Prices are kind of broken above this level. We are literally at 158 or whatever, 160s. I remember I spent the 1 week before trying to sell it, and then kind of basically with the same level of energy that you are speaking right now, I kind of gave up a little bit, and which we do week afterwards.
And then we did get further intervention.
They finally kind of made the move that I've been waiting for, and then kind of it went off that frustration all the way through. Like, so aside from all the losses I had on the way trying to short something that looks like it was super expensive and constant talks every time about intervention to then happening, which we kind of the Monday next week or the Tuesday after.
Well, that's the thing. It wasn't just talks. We did actually have intervention back then.
Yeah, then the intervention happened.
Just in small parts, and we were down, 250, 300 pips on the day, and then over the next weeks or something, we'd end up rising. And they did that a couple of times, and it didn't stick, which is why they gave up.
Yeah,
and
true.
Hence we're now
here. But what I want to say was that yes, even though the dollar yen looks like it's so expensive, and it looks like that the most logical thing it would be to potentially short it to try to push price down, looking at maybe technicals or even how high it is, and even the concerns from the BOG, the reality that it can stay longer for, it can stay up for longer than we actually anticipate, and kind of similar to the trade that I mentioned, the Michael Berry, where he kind of starts shorting the house market, and it play out like 18 months afterwards. Of course, here I'm not expecting 18 months afterwards, but yes, it can be quite frustrating in terms of the timing, and maybe then you don't even get the timing, especially if there is any kind of intervention, because price can move just 500 pips in a couple of 5 minutes. So yeah, it can be a tricky one. So super cautious on that one, waiting, being more patient. And as you mentioned, maybe there are maybe some yen pairs more attractive to trade, like euro yen, pound yen, or even Aussie yen, than the dollar yen. But yes, I think there's all that you mentioned, not just kind of like the currency of the country. There's geopolitical situations. There's China's situation. There's a lot going on that aspect. But for sure, the Japanese economy it's starting to struggle as you get that the yen, dollar yen to above 160s. Just to finalize on I mean, just to go back into that comment from the DAX, from Carlos about the DAX. Where is the DAX? I don't know where the DAX is. Yeah, DAX. What was the comment? Was here, Carlos? Could you have a look at the DAX, please? It was selling off this morning and now seems to be pulling back up. Trend line on 50 minutes, now reverse head and shoulders, and break off counter trend line on 5 minutes time frame. So is he looking for a short? Is that from his message? Is he looking for a potential short from the top, or is it a long and continue to move to the upside? As mentioned, it was selling off. Yeah, it's true. It seems that it's pulling back. There's a trend line on 50 minutes. Maybe I can draw that trend line on 50 minutes. Okay, price is reacting from this trend line. Okay. And now reverse head and shoulders. I'm not really sure how to look at reverse head and shoulders. I never know how to look at those patterns. I don't know if it is like this or not. I just think about osmosis. I don't think about... So the reverse head and shoulder is a long opportunity. Is it a long trade?
I would say, I don't know if you're going to get a perfect sort of or well-structured head and shoulders through there, but I can see the reasonality for a bit of a bid coming through here, reaching some of the higher top rating ranging cluster trading range, and then to see selling come from that. I can see that. But as far as a raw head and shoulders position, maybe not, but through there, yeah, definitely.
So go ahead.
I was more confident last week on shorts, just like NASDAQ and S&P. I think we were talking about this as well, Pedro. But I was talking about this to Dirk yesterday, and everything I've looked at, I've tried to find every reason, and I can see no reason for stock to come down at all. Everything says up. Every single thing says up. So headcount, costs, profit margins, everything, it just screams higher. So that was my prospect from like Q3, Q4 last year, and then I went back on it this past week with Dirk saying, okay, got to reevaluate. Given I would have expected to see a bit more of a Santa rally going through Christmas, which we didn't see, so that gives prospect to reevaluate. But then I've gone and done that, and I can't see any reason for stuff to dip right now. So unless there's an extraneous something else that is, brought into the market, with Trump doing something or something like that, right now, per the prospects, I can't see any downdraft.
Yeah, on the higher time frame, I'll definitely. Yeah, on the higher time frame, I'll definitely be cautious. We're trading at all-time highs, and there is no clear break-off structure whatsoever at this point. We even have this trend line, which maybe it was a trend line you mentioned. Price is still respecting it. On the more intraday lower time frame, there was maybe a short opportunity this morning, just specifically technical. After we broke below this level, maybe could have tried to short from here just to maybe feel this compression all the way through, or maybe even try to come back into this 25,300s. Maybe technically there could have been a short opportunity in here around London Open. Aside from that, nothing much, and I'll be always more cautious in terms of price. Continue to create new all-time highs than to short double tops. I'll be cautious in terms of trying to sell double tops at this point, because the tendency it still can be for price to create new all-time highs, and that's basically what we have seen constantly during these last few days. So anything, just a rule of thumb, anything when you're trading at all-time highs, try to avoid selling double tops, especially when they are not as clear or obvious, because there is always a probability that the price is actually going to at least take that liquidity from the top, and then maybe only after go a bit more to the downside, especially if you don't have any break of structure that is really obvious and clear that maybe price wants to start shifting the momentum. But yeah, Richard, William, what's up? Well, he just left.
What's going on? He's in jail. That's all right. He has bad Wi-Fi. How are you doing, Rich?
What's up, LJ? How are you guys?
Doing well.
I like your new style. It's different from last week, correct?
Yes, I look like a human being again.
Is that the new version? Is that kind of a full new identity after starting working out? Now full new haircut, like
new year, new you. Everything about you must be new. I'm going to start getting way many more tattoos. You know, up to here is going to be just tattoos. New year, new you. Haircut, gymming, eating well, everything.
Did I just hear that he's going to get tattoos?
No, dude, you didn't hear
that.
Yeah,
like a face tattoo, like
face thing.
You do the Mike Tyson, you know.
Yeah.
Oh, can you imagine?
Dude, I'm sweating, man. I've literally just come back from like walking up the massive hill. I went down to see if I could find like some posters, but I'm gonna have to buy some either online or go deeper into the actual city. I couldn't find any.
But you can't leave. Like, what are you talking about?
You can't leave. You're in prison cell, mate. Send your.
No, I was on day release.
Just left the place.
I had like 2 armed guards walking next to me, ball and chain a lot. To be fair though, I was just watching my Wi-Fi. It just completely cut out, and then you guys like I came off screen, and then I came back. I've got full bars now, so. I mean,
hey, well, that's that's the prospects you get in jail. So there you go. You know,
stop complaining. You've got a roof, 3 meals, you've got Wi-Fi, living the life of luxury in that prison cell of yours, mate.
No obligations.
Nah, dude, screw that. I've cut down to like 1.5 meals a day. I've put on way too much weight. Not only that, like the meals here are just too good. Like A, they're just too full of flavour, and B, they're just too filling. So I feel like
no. Come on.
His prison food is just like, no, it's the best food I've ever had while in prison.
I've never eaten so much protein in my life, you know.
Yeah, it's nutritious and everything.
Powdered eggs and whatnot.
Yeah.
Although I have got a cold, so my ears are pop. So every now and then, like, you guys sound like you're whispering to me.
No, dude, that's just the psychosis.
Yeah, that's just your cellmate next to you. He's trying to be like, hey, can we get out of here somehow? Do you want to work together? You know, come on.
I've got a file. There's
bars. I've got a file. You've got a spoon. I'm sure we can do something here.
Let's work together.
It'd be like the great state. Seems like a theme song. Da, 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 da,
oh, man.
Da, 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 da.
New year, same me. Yeah, but that's Akram. That's because you're perfect, mate. You don't need to change.
Yeah, it's more like this.
Yeah, the rest of us, unfortunately, we need to do some self-improvement.
Unfortunately, we need New Year's resolutions.
Indeed. All right, guys. I will have to say goodbye today. I stuck around a bit longer yesterday, but I can't today, so I will have to say goodbye to you guys today. I will see you tomorrow.
Not a
and
problem.
Good luck, Will. Don't get shanked or anything. And see you, Pedro. See you, Rich. See you, chat. See you guys tomorrow.
I'm just gonna have to pick on the
love you all. Ciao for now.
Cheers, LJ, mate. Have a good one. Thanks for yesterday.
I'm going as well, guys. Enjoy. Have a good one. Good one.
Nice
with CPI. Yeah. See you. Thank you very much, guys, in the chat. Bye.
Cheers, Pedro. Have yourself a lovely day, mate.
Peace.
Pedro. I can't leave him go without singing that song to him. It's
I mean, it is his theme song. So.
Yeah,
he's Pedro's theme song. So maybe we should implement that. Like you know how Victor rings the bell. Yeah, Whenever Victor rings the
Yeah,
bell,
yeah, I was gonna say, yeah,
before Pedro
like,
goes out, we play Pedro for him.
yeah, like a walk-in music, like a theme.
Yeah, exactly. Local recording, we get Pedro. There's no copyright, and we can do that. There you go.
Yeah, exactly.
We'll do our own version of it.
Pedro.
We'll do our own version of it, mate. We'll find something. LJ, you like
Beautiful.
making music and whatnot. Find us a
Yeah, I know.
Even-
I can try and do that. I can make
Love
a custom thing. I could do that.
yeah to the same rhythm and maybe the same idea, you know, same key but different chords.
But different. Same but different.
Yeah, so basically we want the exact same, but different.
But different. Yeah. Okay. All right, guys. I'll see you tomorrow. Ciao for now.
Guys.
Ciao, guys. See you.
See you all day.
Adios.
Shout out. See you later, boys. Have a great one.
All right, prison cell William, how are you today, my friend? Did you eat this morning? Did you go to
Good,
the
man.
yard?
I mean, I got to go play basketball. I had a fight with the biggest guy and I joined a gang.
Typical stuff.
Just, you know, standards, you know, what you got to do to survive in prison. No, man, I'm good. I'm a bit blocked up. I'm trying to recover from a bit of a cold that I woke up with this morning, which is a bit annoying. Went for a bit of a walk into town, or into like I'm sort of in the middle of the city that we're currently living in. But there's no like, I want a gimmicky souvenir shop, and I thought there'd be more. You know, so there's no gimmicky souvenir shops like posters of Hong Kong and stuff like that. So there's none of that. So I was going to go buy like a pile of posters and just like sort of put them up. And then when I go into the bigger city, I was going to go get some LEDs and like put some LED strips on. But apparently not. Apparently they don't have any gimmicky shops. So you're going to have to wait till the weekend. So I'm stuck in prison until the weekend. But then hopefully I'll be out.
Do you know why? It's because China is such an exporter that it doesn't keep any of the products that it exports, you know, for locals to buy. So it's just like, if you want LED strips, sorry, bro, go to, you know, I don't know, go up to Mongolia or you know, go to South Korea just for like a weekend or something. Go buy all the
either
stuff
where they're made or where they're exported to.
Yeah.
There's no like middle position.
Yeah. No,
yeah, but you saw it.
You should find all of it, mate. Maybe just not where you are currently. Like
no. I already have. Do you remember that I sent you that photo of that sort of like weird gaming anime shop thing that I was in?
Yes.
That was really weird. I was like majorly overly stimulated in that. I was like, oh my god, I've never seen so much of whatever this is. Like I've never seen that sort of thing before. Like, you know, I'm not into that sort of thing. I've never seen that sort of thing. So like for me to walk into that shop and I was like, what is this? I was like, where am I? Just walking into the I was like, bro, what is this? So yeah, they had like a pile of LEDs there. So I'll probably just like pop there at some point, maybe on the weekend or maybe on Saturday or Friday. I don't know, at some point, as soon as possible, because I'm bored of this like magnolia background now. It's all right, but you know, like I said to you earlier this morning, like I've gone from this is the one thing I miss about home is I put a lot of time, effort, and money into my background back in Wales, only to move here to have a complete clean slate, fresh start. So I wanna just like sort of, I'm gonna have to start all over again. So I don't want to wait. I don't want another 6 months of, you know, not having a good background or having a crappy background. So I want to just go sort it out ASAP, and then I think we'd be golden then. So the Wi-Fi seems okay at the moment. Again, touch wood. I have had a message off my landlord. He's ordered a new Ethernet port thing into the wall. So they're going to come out and fit that as soon as it arrives. So hopefully, I can't imagine it'd be today. I mean, or like tomorrow rather, because it's like 20 to 8 at night here. So hopefully by next week, I'll have like super duper Wi-Fi. If not, I'm going to be super duper angry with my landlord.
I mean, you've still got a few days before, you know, it really becomes a problem. Exactly. So right now, at least.
Yeah, exactly. Yeah, not only that though, it's like there's going to be teething issues. Yeah.
Yeah, your camera's working well. We can hear you clearly. All of the like teething
Yeah.
things of yesterday kind of like has been.
I was like, can you
sorted
see me
out, so-
okay though? Like, it's not staticky. Like you can see
No,
it's
no,
like
no.
very motion.
No,
That's
I
right
can
then.
hear you clearly.
That's the biggest thing. Like, as long as you can see me, hear me, and see my charts when I bring them up, as long as all that is okay, then I don't really care too much about the background, even though it is a bit crap at the moment. Like I've just moved in. You know, this is week 1, day 2 of me being in Hong Kong home. You know, or me calling Hong Kong home. So I'm not too fussed. There's going to be teething issues. There's going to be some sort of starter stuff. You know, I need to make it a home. Like we've sort of made our apartment home now. I just need to make my sort of office space home.
Awesome.
But yeah,
Awesome, mate. I'm happy that your things are like finally like starting to really fall into place.
plateauing. You know, yeah, it's starting to the momentum. It's starting to flow freely like a river. So just gotta grab my surfboard and ride it down, ride that wave. You know. Speaking of riding waves, have you seen anything recently? Have you been looking at gold, EUGU?
Right now, I'm just busy marking up EU. It's just we've had on EU this very nice over multiple days. I think that it started way earlier, as you can see. That this is on the 1 hourly chart. We've had this elongated long downward draft. Wow, that was actually a very nicely drawn line. And then the bottoms of it as well. It started expanding. It started expanding ever so slightly on its way down. So nice downward pressure that we've had. We had a little bit of an attempt to push price up higher, which failed, and then from there on, we still started pushing lower. And now we've yet again come to a point where we're basically breaking this downward trend on EU. So we're starting to print, instead of lower lows and lower highs, we are now printing low, high, higher highs, higher lows overall. So it seems as though the market is still slowed. Yes, it's still slowed at this point in time. We're not really getting that like volumetric pushes going all the way up. However, there is signs of a potential change in direction. Bless you.
Thank you.
Right now, like I said, still a little bit slowed. The news that's coming out today, maybe CPI, maybe tomorrow's unemployment claims might start pushing price a little bit higher. But as it stands right now, I'm not really seeing an opportunity to take any trades really on EU. This is on the hourly. On the 15-minute, when I go down, it is... let's rather say, we did have this attempt to push price a little bit lower here, this channel. We have broken it, effectively retested it basically, and started slowly printing a little bit higher at the moment. It's going to really depend on news, I think. So, but other than that, on EU, I'm not really interested, or what I've seen on EU, I'm not really interested in buying or selling right now. I'm waiting for CPI. The same thing with GU as well. We're kind of like just stuck in this range basically from yesterday, last night, and then the Tokyo session consolidation that we had going into Tokyo over here. We're kind of like just stuck in this range at the moment. It's not the prettiest. That is 16 pips just to the top and the bottom of the boxes. From the absolute bottom to the top of the day so far, it's only 23 pips, and I need a little bit more than that to really get interested in it. NAS has not really presented me an opportunity to really enter. We've had this little bit of consolidation, an attempt to break out of that consolidation, back into consolidation, back down into consolidation. So we're kind of like just sitting here very much sideways on NAS as well. So I'm also just waiting with NAS to show me anything.
Yeah, nice. I rate that. I was going to say you predominantly trade the NASDAQ in the New York session, don't you?
Yes.
Nice.
I did have a trade yesterday during the live stream, which I cut short. So I entered in somewhere on this candle. I think it was just very, very close to... I've got the details down here, but price was going up. It started rejecting, and I think I closed it for about 0.25%. Somewhere around there. I can't remember. It was 726, I think. 726 or 724.61, somewhere around there. I did close it for about 0.25%, and it was on this bearish candle here. There was this area on the left-hand side, which I had initially targeted, and then we had the reaction off of that area a little bit too strongly. So I thought, okay, you know what? I'm not going to play around with this. It is a small trade. I'll enter and I'll exit. If I had held it, it would have been a full 1 to 2. But sometimes that's what it is. It is just what it is.
Yeah, exactly. At the end of the day, we can't predict the market. We got to react to whatever is given to us. So if you feel like the best opportunity there, or the best action that you must take at that point is to take out of the trade, really fair enough. You got to do what you got to do. So I rate that. Yeah, I rate that. Also, just to let you know, if you see me looking down here, it's because I'm looking on my phone at the chat. Because I don't know what's going on with the software back end. I have no control of any. I have no control of anything. I can't see chat popping up. I can't see anything. I can't bring my screen up. The only thing I can see is the little window. So I don't know if that. I don't think it's a Wi-Fi thing, because
if you want, you can ask Remy. Remy can bring up your screen.
Yeah, I was going to say, Remy, can you bring my screen up, please, mate? I wonder if it'll show me you bringing my screen up. If not, I mean, like I said, I got my phone open in the background anyway, and I'm just watching. Oh wow, okay, it won't even. Yeah, so it's now shown me that you guys are now looking at my screen.
Yes,
but I can't see my screen on my computer. So let me know if there's any latency lagging issues, or if there's anything going on whatsoever. Anyway, this was my
mate.
Awesome. No, that's fantastic. As long as you guys can see me okay, that's all I care about. Right, let's have a quick look at this, see what's going on here. So this was GU this morning that I marked out. I kind of wanted to see what was going to go on lower time frame, or so higher time frame, lower price indication going on down here. This is the 1 hour high, 1 hour low consolidation. Marked it out, dropped down onto the 15-minute. Marked out this sort of medium consolidation on the 5-minute, I believe this was. Yeah, so it's on the 5-minute. Nice bullish move coming out of the 5-minute consolidation. Bit of a pullback, or as you like to call it, a base rally. Yeah, right. So a bit of a base here. So this was quite nice. And then I kind of anticipated that continuation a little bit higher. So I wanted to drop up onto the 50-minute time frame. I wanted to see a break and close above this zone here. Now, if we can have a break and close above this zone here, that was going to be a really nice opportunity for me to get in on the market on a pullback. So I was wanting to pull back to this area, couple of wicks down here, show some rejection, and then a buy continuation higher. But we didn't get that, so unfortunately, I'm not interested in taking this trade. That was GU for me. EU is doing what EU was doing this morning. Absolutely nada, nothing whatsoever. Not even interested. Gold has started moving a little bit on the 5. You can see where a couple of wick rejections down here, just a bit of messing about. And then, we've got this nice big bullish 5-minute candle there. Onto the 15-minute time frame. Again, we're just sideways. You can already see what's going to happen on the 1 hour time frame. But we'll wait for just a second. And then, we can see this consolidation here. It's starting to move a little bit higher. We've also, we've also got this high up here. This has been tested now. So we're in that perfect pivotal point of potential buys and sells. Well, sorry, bull and bear move. So we could go up or down from here. We really are in a 50-50 zone. Like, we've rejected to the downside and starting to move a little bit higher on the 5-minute time frame. So this is the 15-minute, but on the 5-minute time frame, we have started to move a bit higher. But we've also come into this high here, where we've started pushing back down from on this small micro trend to the downside here. After the new higher highs or all-time highs were printed the other day. So we really are in a point now where it's any man's game. You know, it could be buys or sells from here. So I'm not interested until we see the higher time frame on the 1 hour. And like I said, it's written. You can see it already on the 1 hour time frame. It's just chop. It's just consolidation. I'm not interested now until we can break and close above this area here on the higher time frame. Let's try that again. There we go.
Nice straight line.
Yeah, yeah, that's straight line. That's what we like to see. Let's delete that. Go away. No, go away. Also, by the way, guys, this is now my $100,000 live funded account back open, ready to go. So we are going to be taking one and only A+ setups. No more garbage setups. No more piddling about on a 5K, 10K high stakes account. I will still trade it. You know, if I'm maybe seeing absolutely nothing during the day, maybe I'll hop onto a 10K account. But this is my $100,000 live funded account. Past phase 1, past phase 2, all in front of you guys. Now I am trading out of a 7.5% or a 7% drawdown. And as you can see, I'm 1.1-ish. 2-ish away. Yeah, let's just call it 1.2% away. So yeah, that's what we're looking at now. That's what I want to see. I want to see if I can find some opportunities to bring me back to break even. And I think gold buys are going to be that opportunity. But I don't want to rush it. I don't want to rush it. Like I said, it's A+ setups only. I'm not going to be taking trades just because I want to see trades.
I like that. I really do. I think that you went through a little bit of drawdown with the account, and you were very, very particular about the setups that you were going to be taking. You got yourself mostly out of the drawdown. Now it's at that point where old habits need to die and new habits need to be reinforced. And if that new habit is, I'm only taking A+ setups and I need to be focused on that, then do that, mate. Just make sure that you stick to your plan and you will pass, not pass, you've already passed the account. You will reach the point where you can start taking profit and start getting payouts on the account. So yeah, 100%, mate. I agree fully with your decision making.
Yeah, awesome stuff. But I want to take a look at the NAS at some point as well. So I'll probably be things I can't really
feeling left out. Feeling left out with NAS. Everybody getting
a little bit, man. A little bit. Everyone's trading NAS at the moment, and NAS is trading nice. The only thing that worries me is everything that's going on with the US. I'm a little bit sort of hesitant to jump into US stocks with everything that's going on. Now I know they say
depends on how you want to trade it. Are you going
to
be
true, absolutely. But you know, I know they say that high volatile markets creates large opportunities. However, for me, I like simplicity and volatility. You know, I'm not one of those people that sees, you know, World War II and thinks, and the reason I say World War II is because let's not even think about World War III right now. You know, World War II and thinks, oh my God, here's fantastic opportunities to make money. I'm not that sort of guy. I'm not the sort of person that sees mass opportunity for volatility in, you know, the destruction of other things. So what I do want to do is see market volatility through change of political pies, through change of financial status with deals and overseas deals. So just standard everyday world geopolitics. You know, that's what I like, that sort of volatility. When it comes to what's going on potentially at the moment, that's sort of stepping outside of my volatility comfort zone. And because the US is the heart of what's going on at the moment, it's like sort of I'm a little bit worried going into stocks like the US 30, like the NASDAQ and stuff like that. Even with major currency pairs, even with major pairs, I'm a little bit worried. I'm looking more like on the sort of minor side of things now, and maybe even potentially look at the DAX or something like that.
Yeah, I mean, I don't think that there's any reason not to right now. Even if there is this uncertainty geopolitically, there's these uncertainties, revolving around the US specifically. I still think that there's opportunities to be taken every single day, whether it's on US 30 or DAX or NAS. Like, the opportunities are still there. I mean, we have volatility in, for argument's sake, gold. People are still trading it. So
true.
It's just that idea of it's just the idea of you finding what works for you and what you're comfortable with, and then just leaping in with
exactly. Yeah, at the same time, I think Dirk was talking about this yesterday. He was saying about how a strategy doesn't live forever, and I felt like saying to him, "Hang on a minute, speak for yourself. My strategy is going to last for a lifetime." Just putting that out there. I am never going to have to change my strategy ever. Not that I've changed it twice in 2025.
I was about to say.
I was going to say, I literally modified it twice last year. So I think Dirk was really hit it on the head. If we're going into new times in the market, then we've got to evolve with it, because we don't know how long that's going to last. We don't know what's going to go on. We don't know how it's going to affect the markets. So if it's going to be here for not a permanent time, but if it's going to be here for a long enough time to the point where if you stop trading completely, then you're going to have no income, then I think it's got to be a case of, okay, look, you got to learn to trade through this. You got to learn to deal with this and try and find a way that you can find harmony amongst the chaos and the strategy, and try and find that sort of middle ground. I think that's what I'm going to have to do probably at some point in 2026. I'm going to have to try and face the chaos and go, right, okay, let's find a middle ground.
Yeah, it's the adaptability. It's either making yourself a little bit more liquid and going along with, or it's you decide to go completely against the current. And at the end of the day, you need to be willing, able, and just accept that certain things is beyond your control. But the things that are in your control, take ownership of them. So in this case, if you find out that gold is not treating you the way that you normally would have been treated with your strategy, but there's an opportunity with, for argument's sake, Euro USD, sometimes you need to jump ship. It's one of those things.
Absolutely.
But you can always come back to gold, as an example. So it's not to say, oh, I'm leaving you in the past and there we go. That's what
I did with gold. I left gold in the past for about 2 years. A year, 2 years. I didn't touch gold. I was a bit like, Mello was the same. Jordan Mello said gold is don't quote me, because what he said was very his opinion, and it was a very strong, bold comment. So I don't want to get it wrong, but it was along the lines of gold is a pointless asset to trade. Now that is not a quotation. That's just
I think his words were gold is useless.
It was something like that, and I agreed with him. And I was like, 100%. I was like, gold is it's pointless, it's pathetic. I hate it. I hadn't touched it for like 2 years. 2025, I've made more money with gold than I have with any other currency pair out there, any other asset out there. All my indices, all my FX pairs, everything I was trading, swing trading or intraday or scalping, whatever my strategy was, gold was the flagship asset. And I embraced that. I looked at it and I thought, it's got me out of it. Earned me $7,000 in 2 months, I think it was. I'm pretty happy with that. If I was an opinionated trader who's concreted in their ways, I would have been like, no, I don't trade gold. I'm staying away from it. And I wouldn't have been out of this drawdown by now. If anything, maybe I would have even blown the account. Instead, though, like you were just saying, go with the flow, or as Bruce Lee says, be like water, and just go with it. So that's what I did. I looked at gold and I said, right, gold, come on then, let's see what we can do here. Let's sit down, candlelit dinner, and let's discuss things.
Candlelit dinner.
Did you like that?
Seeing as you can't see the chat all that much, maybe I'll bring up.
Yeah, bro, you're gonna have to. I mean, I can try. I've just seen Akram's comment. That's our dream space in anime shop. Check if you can find Kimetsu no
No Yaiba.
I'm not.
Katana.
Correct.
For me, that is Demon Slayer, so it's an anime.
Okay, bro. I wouldn't even know. You'd have to send me a photo. I wouldn't even know what the hell that looks like. I wouldn't know what I'm looking for.
It's just a katana with some elegant guard and.
Why didn't you just say that, man? Oh, no problem. I'll go get it for you now.
Easy, mate.
Easy.
You know how cool trading with an Akatsuki coat would be? That would be pretty cool, Void.
Yeah, I get it.
BNB trader saying, so Richard, are you planning on shorting Euro USD? Actually, right now, I'm not planning on doing anything with the Euro USD. Euro USD, like I explained just now, is starting to show the potential of trying to push a little bit more bullishly. We've had this very bearish push down from around about the 24th of December. So give or take the last 2 weeks or so, we've been quite bearish. When we've had attempts to break this upward or this downward trend, it was met with resistance and we carried on pushing lower. But this is the first time now that we're starting to show a real potential to try and break that downward trend. So up until we've actually established that proper break, we're not consolidating, it's not really as flat as what we've got now, then there's the potential to start looking at maybe trying to buy a Euro USD. But right now, it's too flat for me. I'm not interested in the Euro at all.
It's a shame because I thought Euro was going to be really nice, but
I mean,
I don't know,
capitalize
man.
on the sells, yes, while it's selling. Capitalize on the buys when it's buying, yes. How do you capitalize on a flat market when we're busy showing a structure shift or the establishment of a structure shift?
Scalping.
Yeah, me no like the 1 minute scalpings, my friend.
Yeah, neither is that.
We have a very, very pristine gentleman in the background. Do you want to like jump in?
Hello, good to see you two, pristine gentlemen as well.
But I can't see anyone, so I don't know.
It was a surprise to you as well.
Yeah, what's good, Griff? How you doing, man?
Yeah, I'm good, thanks. How are you both?
Swell, mate.
You can't hear him either, right?
All great, mate.
Good. Will, you can't hear me?
Can you hear him?
I can hear him. Can you not hear him, Will?
Oh, you're joking, really? I can't hear him.
Oh no, weird things are happening.
Okay, I'll tell you what I'll do. Now that Griff's here, I'm gonna jump out and rejoin this, and hopefully the software like reboot itself. I really hope it does. That'll be annoying if it starts having Wi-Fi issues now. I'm gonna go jump out now and then jump back in, and hopefully that'll refresh everything. I'll be able to see that handsome Welsh devil. Right.
All right, mate, you jump out.
Has Will moved to Hong Kong now, Richard? Was it Hong Kong? I can't remember.
He's in Hong Kong. He's in a prison cell at the moment. At least that's the joke, because of the background and whatnot. Yeah, he's in Hong Kong, but I'm pretty sure he can give you like way more of the details. He loves talking about Hong Kong.
Oh, good. Yeah, I'll have to ask him.
Yeah. I'm gonna start as I normally start with you, Griff. Are you in a trade at the moment?
You know, I nearly was, Richard. I actually had a trade, the first in since November, and it was a 1% loss about 2 or 3 hours ago, 4 hours ago, I think. And it was a buy setup on New Zealand JPY right here. So I took a buy right there. This is, it's a flag setup, but this is slightly different. It's called a flag plus, and to meet the flag plus requirements, you need an inside bar, followed by an outside bar, and then the entry candle. And then on a lower time frame, this kind of makes the normal flag pattern. So yeah, I took a buy right here. First trend I've seen in a little while, and yeah, it just tagged me straight out. So my stop loss saved me.
Ooh, that is unfortunate.
Yeah, after waiting so long.
You were trying to get in again on the continuation of the trend.
Yeah.
and it wasn't done pulling back yet. That's unfortunate, my friend.
Yeah,
unfortunate.
that's the way that it goes with flags sometimes.
You have to wait 3 months to get your perfect entry, and then it's just like, nope.
Yeah, you think with me being so picky that I'd have a pretty good win rate, you know? But no, unfortunately not. It's just, I don't know why it does this. I mean, 30% isn't bad win rate, but yeah, recently it's not been adding up very nicely, compounding in the opposite direction, all the losses.
Yeah, it is unfortunate, but it was such a nice move during the Tokyo session, like such a strong upward push. Exactly that, like most recent leg, or the last leg before we had that little bit of a slowdown at the top. So nice. So you would think, okay, cool, we're gonna have a little bit of a retracement and then a continuation because it's so strong. Nope.
Yeah,
just
nope. That's exactly what's been the issue with my strategy this last 12 months. It's because we get a trend and then it doesn't continue. It just starts going in the opposite direction or pulling back and ranging. For me, who's wanting to see this move continue, we just haven't been getting any moves like that. We get an impulse and quite often it ends when you start getting the first pullback. Whereas normally you get this first pullback and then it continues a little bit more before rejecting, and then I make 4-5% profit there. But yeah, this year, I keep saying this year, the last 12 months, it's just not been doing that. And I actually nearly took a trade on EJ as well, because at the exact same time, there's my continuation setup where I would set a pending order right here. And I did set a pending order. I think it was 1 pip above like this, but it didn't tag me in. You can see it came so close to tagging me in. Yeah. And I removed my order once we moved 2 candles up because I wanted to avoid this candle, which starts to show a shift in the opposite direction. Yeah, so in the end, it's probably for the best because I think that EJ, I mean, now we've seen this candle, it's probably not a good sign that it wants to continue. And also being in 2 correlated JPY buys at the same time is a lot of risk exposure. So I didn't mind just taking one of these 2 trades in the end. Well, can you hear me?
Yeah, I just about, man. I think. Can you hear me? Okay.
Yeah, I can hear you.
We can hear you, mate, like perfectly.
Can you see me? Okay.
Yeah, we can see you as well.
Can
no,
you?
That's fine. Yeah, no, I'm good, guys. My Wi-Fi just had a bit of a moment. That was really annoying. Really annoying. I refreshed it because I couldn't see you, Griff. I refreshed the whole thing, joined back, and then next minute everything just was like, nope. Yeah, bye. I was like, oh, okay then. Hopefully, I think I'm back now. So.
Yeah, your connection looks good. How is the internet over there? You moved just at the end of December, right?
No, just beginning of Jan.
Oh, right.
Yeah,
Okay.
so this is officially the first full week. This is week 1, day 2 of living in Hong Kong now. So.
Oh, nice.
But yeah, no, it's good, man. It's really good. Yeah.
Tell
really
me
good.
about
Love
it. What's it like? Is it? Have you been there before? Is this your first time going there, and you're staying there for a long time?
No. Yeah, this is my first time in Asia, really, like in proper Asia. Like, I've been to the Maldives, but that isn't really the Asia that I'm currently in now. So yeah, man, it's completely different. It's amazing, dude. It is amazing here. Like you've been to Pembrokeshire, haven't you?
Yeah. You gonna compare Hong Kong with Pembrokeshire?
Yeah, 100%. The reason I love Pembrokeshire so much is it is country and sea right next to each other. So you can literally walk from a mountain straight down to the beach.
Yeah.
Now you imagine putting a city there as well. You've got Hong Kong.
I see. Interesting. I was wondering how you were going to connect them together.
What was the correlation?
You've literally got a mountain, the beach, and a city all in one stone's throw of each other. It's unbelievable. It's like nothing else.
Wow. You have to send lots of pictures. You have to keep us updated
Yeah,
with
yeah,
how
do
your
that. Yeah,
how your
yeah.
life is going to have changed by moving over there.
The Travels
Yeah, man, I
Abroad
was,
by Will.
yeah. Yeah, no, it's good though, man. The only thing is obviously like I've grown up speaking Welsh, French, Spanish. I've never remotely considered even touching an Asian language. It's not something I've ever dipped my toe into or heard. So to be just dumped into Hong Kong, like right into the middle of Hong Kong, a lot of them are English speaking, which is fantastic. But I'm just super glad to have my very pretty translator next to me. So that's not too bad. Otherwise, dude, like I said to her, and I was like, "How do I ask for this?" She's like, "Just point and say, I'll have that one, please." I was like, "No, no, no." I was like, "That's disrespectful." I was like, "I want to be respectful and speak the language, or show that I'm trying to speak the language, you know." And so she's like, "Just say Lego," which is like that one. So I pointed to this thing on the menu. I said, "Lego," and she just reeled like a pile of Cantonese at me, and my face just dropped. I was like, yes. And this woman nudged me, and she's asking like, do you want sauce, or what sauce do you want? And I was like, oh, I was like, okay, yeah, no thanks. I was like, hi, guy. So like, no, thank you. I was like, oh my god, oh, bro, that was like the most stressful order I've ever done in my life. Just ordering food. I was like, oh my god.
You're going to have plenty
But
of those interactions.
yeah, no, but it's good fun though, man. It is good fun. It's amazing. The nightlife is really peaceful, given that you're in a city. It's super quiet, super safe. It's super warm as well. I went for a run. When was it? Yesterday morning, I think it was, or yesterday morning-ish, like 11-ish, and it was like 22 degrees. I went for a walk earlier to see if I could find some posters to put on my back wall. It was 19 degrees.
Wow.
At 6 o'clock or 7 o'clock at night. I was like, what is this? It's amazing.
I've got a radiator on in my room right now, and it's like 18 degrees. So it's warmer there, and just out in the open, and I'm in my little room cold with a radiator on.
Yeah, you can tell my partner is.
Then
Yeah, yeah,
very upset.
yeah. Like you can tell my partner is from Hong Kong because she's used to this. Like her body is bred for these environments. She said to me, she's like, "Grab a jumper, it's gonna be cold." I was like, "What do you mean?" She's like, "Grab a jumper, it's gonna be cold." I was like, "You said it was gonna be cold yesterday. I was boiling." She goes, "Just get a jumper," and I was like, "Right, okay." So I grabbed my jacket, went out. I was like, "It's hot, like it's well hot." I was like, proper hot. And you know, like she comes home now and she's like, "I'm freezing," and she'll like jump into bed because she's so cold. I'm there like taking my top off. I'm like, huh? How? Like we got aircon unit and all. I'm like, oh my god, you need aircon here.
Yeah, that's crazy.
Yeah. It is nuts. It is nuts. But it's good.
Now that we all know how hot and sweaty Will is, let's see how hot and sweaty the chat is. We've got a few people, the BNB trader, asking about a view on Jones, short term, medium term, long term.
Could you do me a favor, Rem? Could you be the one that brings up chat for Richard? Because I dropped chat off the software. I'm too afraid to touch it. I'm too afraid to touch chat because if it starts updating and popping up, my Wi-Fi is going to spaz out again. I can't be asked to deal with that.
Don't worry, we've got Renee in the background. He is very very capable of doing that. I just need to read it out loud and he will bring it up. This was 19 minutes ago, so sorry, we are a little bit behind on chat, but we will get into the chat immediately. I'm going to quickly run through chat, just see if there's anything specifically that stands out, questions, and then we'll go from there. Akram saying, agreed with Will. This was 15 minutes ago. Check the Dow Jones on the TVC data feed from 1897. What? As it's all the same market behavior, just adjust accordingly. So this was with reference to us talking about potentially finding a new market to, trade from, and just, expanding your trading horizons a little bit. I do like that one. We will have a little look at the Dow Jones in just a minute. We've got Trayson saying Weeb alert, Inosuke. Hello, Richard and Will. Don't forget, Stephen, we've got Griff as well.
Hello, Stephen. How was that? I'm pretty sure that was when Stephen wasn't here, when Griff wasn't
Yeah,
here.
I joined afterwards.
That is true.
Yeah.
True.
We'll let Stephen off.
We've got Dane asking about the US JPY as well. We'll get to that one as well. So if one of you guys can prep US JPY, I think that would be great. And then the other one can have a look at US 30. Then we can...
I'll grab US 30.
You'll grab US. Awesome, mate. Then I will catch whichever one is the next one that comes up. We've got Dane asking, will US JPY get a sell now? We will get into that one for you momentarily, Dane. Louis saying, hello, Griff. We've also got the fun Remy saying hello, Griff, as well, which is very nice of you, Remy. We've got us saying, can anyone tell me why the payouts are being delayed? So I'm assuming there's a few payouts being delayed on the Fivers. The best people to ask that, Nidas, is to go onto the support chat from the hub's side and then just talk to support from there. Not entirely sure why there would be a delay, if there is a delay, but it's always best to just ask the support. They would be able to find exactly what is the problem, if there is one. We've got Tiny Toons saying, hey Richard, hey LJ, hey Griff, how are you guys? I guess Tiny Toons doesn't want to talk to Will. it's hey Will as well.
It's fine, Tiny Toons, don't worry. Don't want to talk to you either. I'll get over it.
I'm good. I know Will is good as well. LJ was good.
No, he doesn't want to know.
Well, he's being told in anyway. Griff, you said you were good as well, so
Yep.
we're all good. Dubakura says, sounds like Monaco. Never been there. I know it's a really beautiful place, and I do know that there's a Grand Prix there, but...
Monaco, yeah. To be fair, I nearly drove down to Monaco with my family last year.
Technofeet saying, can we short GJ? I will have a look for you on GJ, my friend, just in a moment or so. It's Vinny saying, hey, Rich, Will, Griff, can you have a look at EU, GU, and UJ? What's your long-term predictions for the pairs, especially for swing positions? More of swingy, very less swingy, bit more swingy.
In the middle.
On the fence. But we will have a look for you on those ones. So you're already having a look at UJ, so we'll add EU and GU as well.
Yes.
Oh, thanks for the star. Dubakor saying that's called the Tropics. Humphrey saying just joined in. Just asking when is the challenge beginning or funding account. So Will trades his funded account live on the Fiverr stream. I have a 5K challenge account that I'm busy trading as well. Griff, I'm not entirely sure. He doesn't really trade on the live stream with us. He just rarely trades.
He just
once every 3 months or so, he takes a trade.
Joins
I
in
would.
and goes again.
Yeah, I would trade on the live stream if there were any trades for me to take.
I was going to say, if it's
With
a
my
trade
Yeah. Humphrey, it's good having you in here. Thank you for joining us with the Fivers live stream. We're live every Monday through to Thursday. So if you have any questions, you can drop them in chat. We will try and get to them in a timely manner. Tell us what it is that you're looking at. You were saying, Will?
I was going to say, if we do miss it, guys, especially if chat's very flowing, not only that, we like to banter with each other as well and banter with you guys in chat. But if we are talking about something specific, whether it's banter, whether it's something like maybe a question you guys have asked, and we do miss your comment, we do try and go back or like 20 minutes, half hour, even an hour ago, or like we'll try and star comments as well. So we will try and get to it. Try and avoid spamming, but if we haven't read your message in about 10, 20 minutes, just feel free to ask it again. We will try our hardest to get to it.
Awesome. And then what do you guys think of UJ? above 160, Bank of Japan intervention, GJ as well, and then the BNB trader asking, will the CPI data today be just as distorted as well because of the shutdown? Many news articles are saying so. All right, cool. So we're caught up on chat. Griff, seeing as we're already on your screen, what are your thoughts on EUJ?
Sure. So I am anticipating bearish UJ, and I've drawn on a couple things here. This is my chart analysis. So first of all, I'm taking note. Actually, there's another one over here. We've broken above all of these areas of resistance. There's a large one, still large one, but slightly smaller. This is on the 4 hour, and then going down to the 1 hour, there's another one here where we've got 4 touches. So this would have been an area I would consider quite strong resistance, and we've just smashed through all of them with this move here. So interestingly, after smashing through loads of resistance levels, it's very important what happens next. And I'm seeing price slow down. So I'm seeing price struggle to move higher. We've got these wicks. We've got several large wicks, and we're breaking and retracing the highs. You can see that denoted with this little dotted line. So price is struggling to move higher. So considering prior price action where we've smashed through all these resistance levels and then we've started to struggle, that's not a good sign. That momentum wants to continue, in my opinion. So I'm anticipating that price will either continue ascending or potentially start reversing right here. Somebody mentioned the 160 level, whether we could cross that. In the short term, so I mean like in the next 2 or 3 days, I don't think so. I think we're gonna, after this kind of price action right here, I think we're highly likely to ascend, range, or reverse. I don't think we're going to continue getting much impulsive price action to reaching this level. But that's not to say that we won't get this move down, range around, and then get it, in maybe a week. But yeah, at least for this week, I don't think we're going to reach that level, and I'm expecting range, reversal, or maybe a little bit more of an ascending and then a range and reversal. So yeah, those are my thoughts on UJ.
I agree with you completely with regards to everything that you've said. I had the same areas marked up for my analysis as well. The fact that we did break through those like significant high areas. This is on the lower time frame as well, so I don't need. I didn't need to go over to the hourly. Like it's very clearly it was an area of interest. We broke through that volumetrically, and when we had when we had an opportunity on the 15-minute to try and push lower, we created a base area and then just reacted strongly out of it. And just remember something, guys, when it comes to the UJ specifically, you will see the majority of its really strong movements during the Tokyo session, because that is the session that is most involved with the Japanese yen. It's a session where the most news comes out, and if you're going to see volumetric movements, it's going to be usually during that time frame. And in general, that is where the movements are. Now, sometimes you can have, like for argument's sake, areas over here during the London session, but that's generally New York news that pushes it as well. I agree. We're seeing definitely this slowed momentum towards the top. We're creating a bit more of an arc or an arch. We're not having the same volumetric movements that we've had on or during the Tokyo session. It's a little bit slowed. I think we're more inclined to possibly have some sort of sideways action, or at least a little bit of a retracement before there's any advancements going higher. So I agree 100% with Griff's assessment. And it's the same for me with GJ as well. GJ is showing very, very similar. So we can do this as a comparison, G, and then this one is UJ. So 15-minute on both. Let me just zoom out a little bit, and then you can see it a little bit more clearly. Very correlated. between the two, especially today. We also, so on the left hand side is Great British Pound UJ, and then on the left is the US. So we're getting the exact same sort of reaction, even though GJ has been way more bullish for the longest time, and this is more of an impulsive push out, where with UJ we were bullish, and then we had a little bit of a retracement and a little bit more sideways action, and then now another bullish leg as well. So a little bit correlated today. So, and we're seeing the exact same slowdown of momentum on GJ. So same idea. We have a little bit more consolidation from yesterday's high points. We got a breakout of that consolidation, pushing price higher. We've created a base, which is usually an indicator of strong trending markets, strong trending positioning. But it was immediately followed up by a lot more sideways movements. And when we did start trying to break out of that area, it was very short-lived. And we are now starting to print slightly lower highs in relation to the previous high points. So yeah, I have the same view on GJ as well. It's a little bit slowed on the lower time frame. On the higher time frame, obviously, we are very bullish. So this could just be a little bit of a pullback. But how deep is this pullback going to be if you consider how bullish this momentum was? So it's relative to the time frame, but a pullback on a 4-hour could be a complete structure shift on a 5-minute, as an example. So just keep that into consideration when you're looking at trading something like this, where it's very, very, very bullish. I mean, if we just the last leg to where we are now, a pullback can take us all the way back to 213. So yeah, it can be quite a pullback just to get back to that point, or a 50% retracement. So very much bullish, but do expect the potential of a slowed momentum and then a bit of a pullback and then maybe a continuation. That's what I'm seeing at the moment.
I agree with you wholeheartedly.
Oh, look at this. If you this on pound as well. The pound also had that exact same, like, real struggle to break above these points. Did eventually break, came back in, consolidated, tried going lower, failed to create a new low, and then from there on it's just been bullish. So
well, I saw you talking and I couldn't hear you, just to let you know.
Okay. Oh, you saw me
Now I
talking
can
there.
hear
That's
you.
something.
I can hear you and I can see
Okay,
you.
that's something.
yeah, we can finally hear you again, mate.
I think my Wi-Fi just dropped again. Like I said, it's going to be frustrating now for a little bit until they come out and fit the new cable. But I think I'm back now, which is good.
Yeah. When are you getting the new cable sorted? Are you getting fiber?
They literally just said ASAP. I have no idea. All my landlord has said to me is they've ordered in cable and it'll be here ASAP, or they'll fit it ASAP.
That sounds promising.
Yeah. So. Yeah. No, it does. Well, if it's not promising, I'm not staying here because this is unworkable. It's stressing me out.
Yeah, I know how you feel.
It's annoying when you're reliant on something like your Wi-Fi and it's either janky, it's dropping you out, you're getting packet loss, that kind of like stuff. It's aggravating.
Yeah. Yeah, exactly. Like I said to them, if they don't sort it, I'm going down into the main router. I'm going to plug a Ethernet port or an Ethernet cable in, a Cat6 cable, and I'm going to run it straight to the top floor and plug it straight into my laptop. I literally messaged them that as well. I literally said to him, I was like, this needs to be sorted, or I am going into your router and I'm going to hardwire your router straight into my computer if you don't sort this. I really came down on them. I was like, you know, this is, I can't work like this. I was like, you know, this is my job. You know, this is, you know, I'm joining these guys on stream, and you know.
So while we
how I
have
train.
you, while we have you and we can hear you properly and we can see you properly, do you want to bring up your screen
What do you want
and
me to
walk us through Dow Jones?
Yes, absolutely. Let me check it out. Can you see my screen okay?
Yeah.
Yes, we can.
Fantastic. Can you see? So US 30 you wanted me to look at, yeah?
Yes.
Sweet, awesome stuff. Let's have a quick goosey gander.
Let's see
So
a master.
as we can see on the US 30,
Let's see a master at work.
something like that. So as we can see on US 30 now, we're clearly in this uptrend on the 4-hour time frame. We can see if we look at the order flow, like a lot of people talk about head and shoulders, a lot of people talk about trend lines, liquidity. They're all very much of a muchness. You know, trend line trading. If you're a trend line trader, you know, you're connecting. It's just like dot to dot. You're just connecting dots to dots to dots, and then same goes with. And then you're just creating some form of channel to identify whether it's going to break out of or not. You know, so it depends how you want to look at it. I like to use trend lines to follow a trend. It literally does what it says on the tin. But I like to look at order flow, so highs and lows, and see whether there's higher highs, higher lows, lower highs, etc., and see what we're looking at, and see look at potentially supply and demand zones. As we can see here, we've got this high up here after this creation of a nice little bullish order flow. Had a bit of a pullback, consolidated around a little bit between this high here. Let me actually draw it up. There we go. So consolidated a little bit between this high here and this low down here. So this was my current 4-hour range. And then we had this nice little drop down, swept these lows, and then big bullish momentum to the upside, breaking above and continuing this upwards trend. So right now we're currently looking at buys. Actually, let me get an EMA. Let me go into insert indicators. Let me find trend, moving average. Is it just standard moving? There it is.
Yeah, it's just standard.
200.
You can change it to an EMA, SMA, or SSMA. SMMA.
Yeah, there we go. So this would have been my trigger point here to actually look at buying this. So I would have been looking at placing a buy order around about here somewhere on the 4-hour. This would have been swing trading. So I would have been holding this all the way to where it currently is now. And then I potentially would have been looking at potentially either stop loss trailing with the EMA, waiting for a break and close under, or a little bit how Griff trades. I'll be looking at swing low points. So I'd be potentially looking at putting a stop loss under this wick low here. That's the US 30. I do swing trade the US 30. US 30, EJ. What else do I swing? I think that's about it. US 30, EJ. I think I swing NAS as well, but not as much. I'm testing the S&P at the moment, or when I get a chance to. I haven't, you know, this is, like I said, this is week 1, day 2 of working in Hong Kong, so I haven't really gotten back into the proper swing of things, just getting some teeth and issues out of the way with. So 1-hour time frame, as you can see, we're clearly in this uptrend following with the 4-hour momentum. And as you can see, we've now come into this sort of supply zone, created that demand zone. Nice little fair value gap here, or imbalance zone, whatever you want to call it. Double lows down here. But we are trying to push higher, but we're sort of failing. You know, I'm not going to mark out a specific point. Instead, what I am going to do is mark out a specific zone. Because what I want to do is, I don't like to look at price as in a specific price point. I like to look at price as an area or a zone that price is interested in fluctuating within. So as we can see, we're at this high zone here. We've had 1, 2, third tap. We're consolidating within the third zone here now. I'd love to see what happens underneath. That is not a straight line, and I refuse. So let's get a straight line. There we go. So I'd love to see what happens underneath this zone here. So this is our current high and low. Here's our swing point. Everything in between this, if you're trading the 1 hour, is garbage price. I want to see a break and close above or a break and close below. So let's drop below on the 15-minute. 15-minute is a little bit nicer. This is a little bit off-putting, but we can see that there's pure consolidation here. Not too sure whether or not I like this. A little bit unsure on that. However, this is quite nice. If we can break and close above this wick high, I think I'd be interested in buying on US30. I don't think I'd want to sell. I certainly don't want to be on the lower time frames. 15 and 5 minute I'm not too interested in. If I was to trade that, let's have a look at the 30. 30 looks okay. If I was to trade this, actually the 30 looks like you could treat it like 15 right now. But I think the 30 is the lowest I'd go. I think the 1 hour time frame is going to be the time frame that you trade. If we can drop, I don't know, man. Even if we dropped broken close under here, it could still be a pullback. It could still be a pullback within this zone here, like within this, which is really interesting. So I think I'd want to see a break and close above. I think I want to see buys on US30. The only thing I wouldn't want to intraday trade this. If I was forced to, if you put a gun to my head and said, buy or sell, I think I'd be looking at buy on a break and close above this point here on the 1 hour time frame. If not, the only opportunity I had to trade US30 was this cross of the 200 EMA on the 4 hour chart. Other than that, that's my US30 breakdown.
Thanks, Will.
That's right, man.
Yeah, thank you.
Guys, I do apologize if I sound really nasally.
Yeah, you're a bit blocked up, mate.
I'm battling a cold over here, so I do apologize. Hopefully it'll be gone by tomorrow. Just battling a bit of a cold.
So for everybody in chat, we do have high impact dollar news that will come out in roughly 1 hour or so. It is the core CPI month on month, it is the CPI month on month, and it is the CPI year on year. Now, what I can see on US 30 right now is the fact that we have serious consolidation, which is in line exactly with what Will has said. So right now, we're stuck in this little area over here. This is on the hourly chart. It looks very reminiscent of what we saw over there a while ago. This was last week, Wednesday. A little bit of consolidation and then a strong momentous move pushing price lower into an area of consolidation, which is in line with a very nice area of interest. So right now, we are at a point where price is struggling to push above where we are currently on US 30. The news will most probably force it in its new direction. So up until the news, I would say, which is in 1 hour, I would say be cautious of any of these consolidating pairs assets prior to the news. It can move violently in one of the two directions, and it can also move unexpectedly. So I would say tread with caution right now. I would rather wait for the reaction and then a confirmation of continuation before I enter a trade.
Yeah. Or it could do nothing at all. Like there are some cases where even high impact news will just do nothing. So the unpredictability sometimes. Yeah, literally that. So the best bet, I always say this, is just stay away. Or when in doubt, stay out. And if you're in a trade, when in doubt, pull out. It's great life advice.
Very much so, yeah. I agree with you. Just want to quickly have a look at chat. Nature Love saying, what do you think about CPI? Because this is the start of the year, and if so, it is a drop for gold. What do you guys think? Do you think that CPI is going to impact gold strongly?
I couldn't say. I don't really follow news events, to be honest, with my style of trade.
What do you think? Do we think the CPI is going to affect gold?
Yeah.
Probably.
I'd imagine so. If it really affects the dollar, then I could see it affecting gold as a byproduct. But CPI, I don't know. Maybe I try. I used to look at CPI. I used to look at high impact news events and be like, okay, how is this going to affect the asset that I'm trading now? Nowadays, I'm just like, I'm just going to stay away an hour before and after, or half an hour before and after if I'm really trying to find a good setup. So maybe it'll affect gold through affecting the Dixie. I don't know. Is my answer to that?
I'm going to say it can, but I think that there's larger impact things outside of, let's say, for argument's sake, CPI, that I think is going to be more of a driver for gold. I think if there is going to be a movement, I think it's going to be lift. If CPI were to cause gold to go up or go down. In general, we have been very bullish for the longest time on gold. So my expectation is that we're going to carry on being bullish until something proves that it wants to start pushing the price down. I don't think CPI is that mover.
I think there's more. I think there's eyes, like a lot of eyes, on more important things. Not saying that CPI is not important, because CPI is quite a largely important news data release. But like, I think there's a lot more going on through geopolitics and just what's going on around the globe, especially involving the US. That there's more eyes on that to understand how that's going to affect gold more than the CPI.
Yeah.
So I think it's going to be. I think it's going to be anticlimactic.
Yeah. Right now, gold is stuck between two areas of consolidation at the moment. My apologies. Hey. Here we go. Right now, gold is stuck between these 2 points. So the high point is 4,600 and the bottom portion is 4,575-ish. Unfortunately, we're kind of stuck in this area right now. It's not really much of a pullback in the sense that it's more of a consolidation. We're waiting for something to kind of like move the market a little bit. We've been very bullish. We've created all-time highs recently. It's a little bit of a pullback. We don't know how deep this pullback is going to be, but as a sense to say that CPI is going to cause gold to rally up, I don't think that is going to like impact it that massively. I would still tread carefully around the news because it can move things unexpectedly. So that's what I would say.
Just tread careful. Go mine sweeping.
Sasa is asking for Euro USD. Where am I now? There we go. Euro USD. This is the 4 hourly. We have been quite bearish for the longest time. And when we had an opportunity to push price back up again, we had a little bit of a retracement. We just re-entered this downward pull yet again. When it comes to EU, we did create a new higher high on the lower time frame. So if I go down hourly, we had all the way down here, we had this downward push, which was sustained for a few days at least. From now, we started breaking this downward trend. We created a high, we have a low, we have created a new higher high, and we have a new higher low. However, this might be very short-lived. It was indicating the potential for it to start pushing bullishly. But the problem is, when we were supposed to have follow-through, we are creating lower highs in relation to the most recent high swing. And this equal low portion down here is a little bit concerning. On top of that, we are showing stronger downward pushes and very short-lived bullish rallies as well. So Euro, I think, is also still waiting for some sort of impetus to try and force the market in a direction. If it's going to be CPI, that is possible. CPI can move the dollar, because I mean it's the consumer price. It's to say, hey, listen, how much is the consumer going to have to fork up for the bare essentials? Bread, milk, that kind of like stuff. The more expensive things become, it's usually
what's in the basket and how much is it?
Yeah, and it's usually a very strong indicator of how strong or how weak a specific asset is. In this case, the dollar. So I would say still trade carefully with Euro USD as well. To me, it's a little bit uncertain where it wants to be right now, because it is creating a higher high, but at the same time it's creating a lower high as well. It is creating a higher low, but it's also at the same time creating an equal low. So it's a little bit conflicting on the lower time frames. On the higher time frames, it's a little bit more clear. We're still on the daily. We've had this long downward rally. We've come into the most recent area of interest and reacted off of it, but the follow through we're still waiting for. But if you zoom out a little bit more, it might seem a little bit more flat across the board. So yeah, it's a little bit difficult to give you an exact destination for Euro USD right now. I don't know about you, Griff, whether or not you agree with that.
Yeah, I do. Like you said, on the higher time frame, it's right in the middle of a range. So immediately could go to the top of the range, could go to the bottom of the range. Both serve to pull it fairly equally, I'd say. And then kind of on the middle time frame where you are now, we've got that long descending channel. We've had a breakout, but we've not been able to continue. And again, we're kind of ranging, and it's kind of unclear which way we want to go. I mean, I do like it when you have a strong push up, and then we kind of continue descending, kind of continue trickling down, because quite often you might see that as the first pullback on a larger trend potentially. But also in this case, we've like the strong move that started this was clearly a news candle. That's what I would call a news candle, a huge candle with no wicks on either side. Price obviously moved very quickly at that time. Was that during NFP? No, that was yesterday.
This was Monday, 2 p.m. my time. So if we have a look at what happened on Monday, that was a bank holiday for JPY. But no red folder news. We will have to go over to the news and kind of like see what happened on Monday, to see if there's something specifically 13 hours ago.
Doesn't look like there was any red folder news that caused it. Well, nonetheless, it's clear volatility. And I think when you get volatility like that, it's really important that you see momentum continue. And in this case, we moved up a little bit, and then we started pulling back and ranging and moving in this corrective manner. So again, I would say that on the lower time frame, there are signs that price could go in either direction as well. Because right here, we could reject, we could break that higher low you've drawn on, do a little sweep and continue moving higher, or we're just going to continue trickling down towards the bottom of the daily range that you had. So yeah, I'd say it could go either way. And when that's happening, you want to sit on your hands and you want to be patient.
Yeah, no, I agree with that as well. MGN saying we've had an evening star reversal pattern on all UJ and EJ on the hourly, but no follow through. So we are probably waiting for CPI before we see the next decision. So on the hourly, yeah.
I don't see it on... okay. I can see on EJ, evening star formation, that's when you have like a candle up, a small candle, and then a big candle down, right? It's a 3-candle formation, is it?
Yeah, I think it's like a 1, 2, 3, isn't it?
Yeah, so you've got like a candle up, a doji, and a candle back down again. I think it's super clear on EJ in particular.
On UJ, it's a little bit stronger going into. So you've got this very strong bullish candle. You have a little bit of a doji, and then you have a not so strong but slightly stronger than the doji candle attempt to push back on the hourly. This is more of an evening star over here.
Yep. I feel like EJ, I don't look at the lower time frames, but I feel like maybe this is signifying a small ascending channel on the lower time frame, and then the third candle of the evening star is like a push down, and then we've got kind of the first pullback, so we've moved back up again, and now we're continuing to see that move down. So for me, this is kind of like a reversal, but yeah, it's not super clear momentum just yet. Momentum is still overall to the upside, in my opinion, but we are definitely starting to see a shift.
Yeah, whether or not it's going to be a full-blown shift and it's going to carry on like that for a few days, or whether or not it's a shift for a day, maybe a few hours, and then a continuation back towards the bullish side, that still begs to be seen. But yeah, it's definitely an interesting thing to consider. We have CPI coming out in about 40 minutes or so. So up until then, I would say sit on your
I was
hand.
going to say yes. About 40 minutes. The best bet is if you're not seeing anything half an hour before, don't bother. Like, just stop trading, because half an hour before, unless you're like a real scalper where you're in and out of the market within like 15 minutes max, it's really not worth taking a setup half hour before the news.
It's like the calm before the storm. You don't really normally get much.
Yeah, exactly. Yeah, like if you're like, oh my god, this is chaotic price action. 1 p.m. kicks in, and you're like, oh, brilliant, half an hour until news. Okay, I don't like that it's half an hour before news, but this is the perfect setup. It's like, okay, look, like you said, it's calm before the storm. The flat is there. The waves are coming. Just take your time.
Yeah. CCE. Let's just say CC. Statistically, what would be the most traded pair on the Fivers? I think the most traded pair would probably be the most traded or most liquid pair of all of the pairs, and that's EU. So I think EU is generally the most traded pair globally, and I think it would be statistically the same with the Fivers as well.
Yeah,
I'd anticipate the same, but yeah, we don't have that data. We're just the live streamers.
I think it's good to get that data.
We're just the live
streamers. It's a response.
Yeah, like you said, I'd imagine it would be EU, but I don't know.
Yeah, I'll just assume. But yeah, Griff said it perfectly. We are just the live streamers. We don't have that specific data.
We're not privy to that information.
We're just the pawns, mate. Like we're not the knights and the kings and whatnot. We're just the grunts doing the grunt work.
Yeah.
Dom asking for UJ, if CPI is hot, it will be highly bullish. No, I mean the way that it works is, let's say we look at UJ, you have your base currency, which is $, and then you have your quote currency, which is yen. So this 158 that we have now is how much of the yen we need to buy 1 unit of $. So yes, if the CPI is good, if it's better relatively for the market on US, we should see price pick up. So yes, it should then continue. We've already answered the BNB traders question. A to Z Real Life is asking, what is the best time frame for analyzing a trade? I think that is an interesting concept, because I think it really differs from person to person. Griff, what would you say is the best time frame for analyzing a trade?
Well, I may be a little biased, but for me, it's the 1 hour. That's the one time frame I trade, and that's because I feel it's a pretty good in the middle time frame where you can kind of see what's going on the 4 hour and the daily, but you can also kind of infer what's going on the 15-minute as well. So it's a good in the middle time frame, because if you trade anything less than the 1 hour, you've really got to zoom out a lot, or you've got to switch to the 4-hour daily to see what's going on. And if you're on the daily, you have no idea what's going on the lower time frames. Yeah, I think the 1 hour is a great in the middle time frame, and that's what I've spent all my time mastering. But like I said, I'm super biased. I've been trading the 1 hour for like 5 years, and just the 1 hour.
Yeah, I'm lower time frame, but if I'm going to start my analysis, it's going to start on the 4 hourly at the very least. I will sometimes go over to the daily, but the daily is not really something that I have to check every single day. You can kind of have an idea, just, you know, okay, cool, today was a very strong bullish day. When you're on the lower time frame, like the hourly, then you can see, oh, okay, you know, we've pulled down a little bit more. You can kind of assume that, okay, we're not all that bullishly. So you can kind of like infer what the higher time frame is doing by looking at the lower time frame, and vice versa. You can also infer what the higher time frame is doing by looking at the lower time frame as well. So for me, I start on the 4 hourly, get a good grasp of what the market is doing. If there's any sort of rally points, if there's any sort of pullback points, is there areas of consolidation? And then I work my way down until I get to an entry point, which is on the 5 minute, and then I'll enter on the 5 minute. But you cannot go wrong by analyzing the higher time frames. You really can't, because everything trickles down from the higher time frame down to the lower time frame. It does become a little difficult when you're on the lower time frame if you only focus on the lower time frame to get like a clear view of what the market is doing. You back with us, Will?
He's meditating, Richard. Don't disturb the man when he's in his meditation. Come on.
Absurdity is asking, hey, everyone, is there a giveaway? Not today. There isn't a giveaway today. However, we are tantalizingly close to 100K subscribers. Now, what that means is when we reach 100,000 subscribers for the YouTube channel, we get a silver play button. And I can guarantee you, we will most probably, let's say I'm 70% sure that we will definitely have some sort of giveaway for the 100K. But not only that, 2026 is the Fiverr's 10th birthday. The Fiverr's is turning 10 years old this year, and that I can guarantee you is going to be an event, a massive event. Cannot give anything away, but you better be there on the day where we turn 10 years old. Maybe the week, maybe the month, we don't know. For some definite giveaways, there's going to be a massive event for that, so do stick around for that. But you guys need to like and you need to subscribe to get us to 100K in order to be a part of that, don't you think?
That's pretty crazy. 100K subscribers probably, and 10-year anniversary all in the same year.
That is crazy. Like 2026
event in the Fiverr's history, guaranteed.
It's gonna be cool, dude. I'm really excited, man. I'm super proud of the Fivers. You know, I'm super proud to be part of the Fivers and to be such a big part of the Fivers as well. Every single day, I'm live streaming in front of you guys. They were established in 2016. 2026, 10-year anniversary. Plus, it was super close to 100,000 subscribers. Is incredible. Like, that is massive milestones for any company, any business, any brand. And we couldn't have done it without you. So, you know, it's not just a case of, oh my God, guys, we're amazing because we're at 100K. It's also a point of like, guys, thank you so much for the support. Thank you so much for joining us and enjoying who we are and the brand we are.
Yeah, and the thing is, the Fivers would not be where it is today if it weren't for the community. Okay. If it weren't for everybody around us, you know, supporting the Fivers, being a part of this journey. And this is a way for the Fivers to give back, to say thank you very much for bringing us to where we are today. Here is some free giveaway stuff. Here is some competitions. Here's some free information, because that's technically what this is. This is free to you to use however you see fit, the live stream. So it's it's a thank you from us to you when we reach certain milestones. So we can't do this without you guys, and we're very thankful for you. Money Diary is saying technical analysis without an oscillator on your chart will cause analysis paralysis. I don't know if I agree with this statement. I think you can trade naked charts without any indicators quite comfortably. I don't believe you need to have an indicator.
I do it. I don't use any indicators.
Yeah, I think an oscillator of some sort or an EMA or something, you can't go wrong by having it on your chart. But I think it's an add-on. It's a tool that you add to your chart to make visuals a bit easier. But that's just me. I honestly think you can trade without oscillators and without any sort of like visual aid.
Absolutely.
Griff, you agree?
Guys, right, I'm gonna have to love you and leave you. I don't know if you guys can hear me okay. My Wi-Fi has gone and taken a really bad turn. So I'm gonna have to love you and leave you. I'll see you all tomorrow. Hopefully by then the maintenance crew has come in and sorted out all the internet, and I can have super fast Wi-Fi again. If not, then I'm gonna go down and smash someone over the head with my computer. So let's hope it doesn't come to that. But in the meantime, guys, thank you very much for joining. I'm going to love you and leave you, and I shall see you all tomorrow. Thank you very much, guys. See you later.
See you, Will.
Sure. Thanks, Will, mate. Really appreciate your commitment, even though you're going through some technical difficulties.
Do you have anyone else joining you, Richard? Because I have to go as well.
Oh, you can hop out, mate. We've got some traders in the background that will be joining us very soon. So
awesome. Sounds good. Nice talking to you, Richard.
As always, mate. It's always a pleasure having you with us.
You as well. Enjoy the rest of your day, mate.
Cheers, Griff. Have a good one.
Bye.
Cheers. All right. And then there were just one. We're just waiting for some backup, and then the backup arrives.
Hey, Rich. How are you? I'm good. Long time no see.
Yeah. Like the good old days, just the two of us.
Good old days, exactly.
Yeah. How was your travels? You've been a little bit AWOL for a little while, and you look well, mate. Like you look rest. You look ready to absolutely slay the market.
Yeah, exactly. I just requested my payout today, actually 4 a.m. today. So let's see now. And I'm just waiting for the payout, and I'm ready to trade again with, of course, all of you guys. So hopefully today I take any trade if, of course, I get any setup in front of our amazing viewers. So yeah, let's see.
Awesome, man. Awesome. I'm just going to quickly run through chat. There were a few questions that we missed out on. Claudio saying, hi team, in from Italy, what is the settings of your EMA or SMA in the 1 hour? So mine that I use is just a 50 EMA. So this is a forex EMA one, but the inputs is 50 EMA on the close setting, and I just have it as a little green one. It's just a visual aid. I know Will sometimes adds a 200 EMA, but that's about it. So it's just a 50 EMA on the 1 hour. KR saying, I think EU is bearish. It is starting to potentially move a bit more bearish, but we've already discussed that we think that this can either be a short-term retracement trying to push price a little bit higher, and then a continuation of going lower, because the higher time frame we do have, or the higher time segment we do have, this long downward push. So there is a potential for us to continue going lower, but I think it's going to be a little bit more dependent on CPI, whether or not we're going to continue lower or pushing up higher. Affordable saying, we also have a contracting triangle on the hourly suggesting bullishness. I'm assuming this is also on EU. So on the hourly, you said, yeah?
I don't see any triangle. I'm good with
Yeah, I
pattern.
also don't really see a
Um,
triangle right now, unless you're referring to maybe this as the triangle pushing price lower, and then this over here being, the
yeah,
bottom of the triangle.
it is not the picture perfect triangle. I'm a pattern trader myself. I do trade trend lines here and there, sometimes corrective patterns, but I would not consider this as a clean triangle pattern or
Yeah,
basically some
I
continuation
would.
pattern.
Yeah, I would say if you go onto NASDAQ and you go onto the daily, then you'll see, or there was at least a little bit more of a contracting triangle
Yeah, it was better.
like that over like a few weeks ago, going into like a few days ago. So you have a high, a lower high, a lower high, a low, a higher low, higher low. So this to me is more of a contracting triangle, but I'm not really seeing it on EU right now.
Yeah, that was really a good kind of a clean pattern or triangle. It was really good.
Mm.
And let's see what we get today. Have you taken any trade? Have you got involved in any trade?
Today, no, I have not. I am waiting for EU. Oh, not EU. I'm waiting for NAS for New York session. I had a trade yesterday afternoon while I was on with Victor, but I did close it out a little bit earlier because it was showing a little bit of slowed momentum close to an area of interest for me specifically. So I had this top end of this was Friday's high. I had the top end of Friday's high marked out. I entered the trade a little bit late, not up here. I think it was all the way over there. But I also had this
I took the same
consolidation
trade
section.
yesterday, by the way. I
You
took
did?
the same trade, yeah. My stop loss was a little bit wide, and my TP was also, a little bit wide.
So
Yeah, somewhere around that.
you
Yeah,
were
yeah,
more something like that, maybe.
it
I
is.
know you do 1-to-1s, but I don't know exactly where you would have gotten in.
Yeah,
But maybe.
let me see if I can show our viewers.
Yeah, Remy, if you don't mind showing us Samir's screen, or switching over to Samir's screen.
Yeah.
In the meantime, Humphrey is also saying, I need help here. To say the truth, I don't know anything here. Watching is like watching a movie. I have zero experience, zero knowledge on this. My mentality is
Hey
strong.
guys.
I want it as soon as possible. So, sorry, Samir, you wanted your screen up, yeah?
Yeah, yeah. Actually, I
There we
think
go.
let me. All right, now it's good. Now it's good. All right.
Okay, Humphrey,
So
we'll get to your question or your sentence just now. Samir, you can run through your trade for us, and then I
all
will
right. Yeah.
prep an answer for this one.
All right. So yesterday, NAS 100, as we can see, I just have my trend line. I had my trend line something like this. So definitely price kind of respected this area. If it has to break, definitely we would have seen some kind of momentum, but that didn't happen. So instead of that, we saw momentum to the upside, which means this trend line is holding. And I remember close to, I think, Christmas, we all was sharing our strategies. So my key point then also was same, which I'm gonna say right now again, which was when price comes to your area, just see. Let's wait for let's say 1 hour or maybe 30 minutes. See how the price is reacting in that area, and then once price is showing you strength in your favor, then take the trade. That was my whole key point that day also, and today also. As you know, NYSE showed me the signs of bullishness. I took the trade here, my stop loss was here, and I was going for 1-to-1. My stop loss was 150 points to be precise, and I was 1-to-1 here. I closed my trade somewhere around here because we was getting almost second half of that particular session, and I don't want to see price reversing all the way and then maybe continuing to the upside. So I was like, let's just secure the profit. So this was the whole reasoning behind it. Simple trend line, trend continuation. And one thing more I want to address, which is this resistance area, which in my mind was a liquidity point. I was like, even if I secure some profit somewhere around here, which makes perfect sense as these are highs and this is a liquidity point to me. So I consider this as my target in this particular trade. And yeah, and also I'm gonna share one lesson with you all. So this session I shorted here. It was my mistake because I didn't follow my rule. I didn't wait it for the 15-minute to close. So I just wait for first 15-minute to close in my favor, like wherever I want to enter the trade. I was considering the same thing, that this trend line may be a liquidity and then I can secure something. But what happened, I didn't wait it for the close and I took a hit. I just closed my trade somewhere around here. It was my mistake. I could have entered buy right here because it closed bullish, and of course we would have any pattern on the 1 minute, which was maybe a trend line breakout or something like that. Like as you can see, we was breaking the trend line. So I would have gotten in a buys right here, but I didn't follow my rule. Just didn't wait it for the price to close, so that's why I took a hit. It is, I'm just I'm responsible for it. So from next today, this particular session, I didn't make a mistake. I just waited for the 15-minute close. And today also I'm gonna do the same thing. I'm not gonna repeat this mistake that I did. Of course I didn't took a win on this one. I took a loss here. I accidentally took here. Not accidentally. So I just knowingly took this trade. I was way too confident, maybe because I was hitting wins here and there. So I was like, okay, let's just throw a sell right here because we have some confluence here. But price didn't close in my favor. So you can take lesson from this. Always wait for your your trading plan to give you some kind of signal. So what if my trading plan was, I wait for 15-minute close. I didn't wait it for it. I took a hit. I'm responsible for it, and I take full responsibility of that particular trade. So today I'm gonna do the
Plan.
same thing.
Go ahead.
Oh
Sorry, I
wow,
thought you were finishing
Victor.
your sentence. Go ahead, Sam. Please finish
Yeah,
your
I'm
your
just
sentence.
yeah, I'm just finished. I was just gonna say that just wait for your candlestick to close in your favor and all these things. And I'm just completely being honest with our viewers that I did a mistake, and now in upcoming sessions I will not be repeating the same mistake. So yeah.
I mean,
I
it's
anticipating the end of your sentence. I meant
Yeah,
to say, uh, plan your trade and trade your plan, and
exactly.
that's what we are. That's what we are here for. But we're not perfect. I'm not perfect. Richard isn't, and Sam isn't. I mean, we all
I'm not
have
perfect.
these moments where we deviate from the plan, and that's sometimes it actually it goes well, and that's not a good thing. That's even worse. You might
Yeah,
trick yourself into thinking, oh, I can get away with it more often.
yeah.
But that's even more dangerous. But hello everyone, I haven't said hello yet. Richard, Samir, and especially everyone watching. We have 212 people watching us right now, and I hope that we will be smashing that 200 likes limit as we had yesterday as well.
I'm pretty sure that chat can oblige us with a nice little thumbs up and a subscribe. Victor, hello. Good to see you again, my friend. I am glad to see that you are back with us as always. I just want to mention one or two things before I myself have to take my leave. There's a few new people in chat. There's Easy Nest from India. We've also got Humphrey as well. There's a very interesting statement from Humphrey from about 23 minutes ago. This one specifically, where he's talking about he is completely new. He has no experience whatsoever and trading knowledge. And this is exactly the space that you need to come and learn. So, unfortunately, I'm going to be jumping out, but the two gentlemen down here are absolutely perfect when it comes to introducing new people to trading. So I will leave this comment in your hands first and foremost, and then secondly, Ned Flemberg, is Richard from South Africa? Yes, I am South African. Am I from Pretoria? No, I'm not from Pretoria. I lived in Pretoria for a while, but I'm not from there. With my accent, yeah. Anyway, guys, I'm gonna love and leave you. I know that you guys have something special planned for chat today.
Yeah, let's go. We have CPI and let's see how it goes.
Yeah, CPI is in 15 minutes.
Yeah, let's see.
Yes, yes, indeed. So thank you, Rich, for holding the fortress while your slot was transcurring. Thank you for that.
It's always a pleasure. And thank you to you, Victor, for saying thank you to me for holding the fort down. All right, guys, have yourself a lovely day. Victor and Samir, I hope you guys have a great day as well. I'll see everybody tomorrow.
Yeah.
If you haven't already, please drop us a like. If you haven't already, please drop us a subscribe. We're trying to get to 100,000 subscribers. This is the Fiverr's 10th year in the industry, established 2016. Wow. 2016. 10 years. We have a lot of amazing things coming up this year. We've got the futures that's going to be released at some point. It's our 10th anniversary. And it's all thanks to all of you guys out there supporting us. So we would love for you to continue doing that as we go forward. All right, guys, that's the last things from me. And then also, Remy, thank you very much for producing us today. Really appreciative of your assistance while Will is having some technical difficulties. Right, that's me. I'm out.
Gratefully,
Take care.
Richard. Thank
Bye-bye.
you. All right, Samir, how is everything on your side?
It's great,
You're
actually.
waiting
So,
for New York Open.
yeah, I'm just waiting for NYSE. I took a hit yesterday, not yesterday, day before yesterday, and I don't want to
Hmm.
repeat any mistake now. So, of course, that loss didn't hurt in my account that much because I took quite a few wins here and there. But again, mistake is a mistake. I'm not gonna repeat this mistake. So, you can take lesson from me, guys, viewers. Our chat, take lesson from me. So don't make mistake like this. Like if a particular thing is not in your trading plan, just don't do it. So again, coming to the point, which is, yes, I'm gonna wait for NYSE open, and let's see how the 15-minute close, and of course what my strategy is going to the 1 minute and trading some continuation patterns with the stop loss below or above the highs or lows, and that's it. So I'm just gonna wait. Now it's a waiting game. So yeah.
There is a question here from Thank Bucko. Samir, would you like to answer that?
Yeah, definitely. Okay, the question is, do you use ICT or anything else, or just use price action? I'm so curious. So, to answer this question, let me, talk about my journey for maybe 1 or 2 minutes. So, I started with price action, which was, trading patterns, continuation patterns, some kind of impulse and corrective type of momentum, that kind of price action. Then I was a big strategy hopper. I tried SMC, ICT, liquidity, everything. You just name it, I have tried it. But then after 2-3 years, what backed me was my foundation, how it was built, which was based on simple price action, which was some kind of patterns you see online, which was very basic, some kind of bull flag, some kind of corrective patterns, all these very simple things. So now I use simple price action, continuation momentum, and paired with patterns. What do I mean by that? Continuation patterns. And if I be a little bit more specific, let's see if I have any example. Okay, maybe something like this. It was a kind of a flag pattern, something like this. If I give you some kind of example, so something like this I trade nowadays. Very basic price action, and of course paired with market structure and a little bit of more confluence. And what my confluences are: some trend lines, some that's it, just trend lines. I don't use liquidity, I just target the liquidity. I don't take moves based off of liquidity. Like for example, if price has breached this high, I will not short it. I will instead buy from here, and I will target these kind of areas. I don't trade based on these kind of areas. So yeah, that's what I'm following nowadays. And again, the way I built my foundation, that saved me after 3-4 years of losing and trying everything, ICT, SMC, whatever, whatever you want to call it. So yeah, just basic price action, that's it.
Nice. I will answer the same question for our viewer, for the person who uh, ask the question, and everyone else who is also curious. You might be more curious people in the audience. All of you curious viewers, don't forget to like the stream, and subscribe if you're not a subscriber yet. In my case, I only use two concept or two patterns, which is the quasi, which is a reversal pattern. I can explain a little bit more about it if you guys want, and the order block. The order block is a very simple graphical visual um, representation of where one side took control. That's it. That's what the order block is to me. One side took control, and that tells me something about the market, about who has the power, who is in control, and what is likely to happen next. These two things, quasi and order blocks, and I use top down analysis and bottom up trade management. That's it. Very, very simple. I know I may not be, if you don't know what a quasi is, then you still don't know how I trade. But that's ICT. I don't think that is considered ICT, although ICT does use the same term, order block, but his order blocks are different than what I do, or mine is different. I don't know which one is different, but they're not the same. That's the point. And to me, the quasi and the order blocks are pure price action. That's it. That is reading the market, reading candlestick patterns, and that's what they are, and chart patterns, to understand what's happening, to understand the story behind the move, and to have a chance, a little bit of a better chance, advantage on knowing what's going to likely happen, unless so long everything stays the same, right? If news comes out, maybe technical patterns may not hold as well, or if something else happens. But as if everything stays, everything remaining equal, the patterns and chart patterns should give you the direction that is likely to go, that the market is likely to go into. We have David with us today as well. Hi, David. How are you doing? David Pedrini. We have HK118 dash I.
118.
I don't. Yeah, I don't remember that dash I. I think that's a new addition to the username, or was
Yeah,
it before?
exactly. I think
But
118, HK118 is always there. He shift things here and there sometimes.
yeah.
Yeah.
But thank you for coming in and letting us know, greeting us, and we greet you back, and everyone in the audience as well, because we have a great community. Talking about community, our Discord community is a great place to start. I will go back to the question of the gentleman who asked what to do. He is watching like a movie, meaning not exactly knowing what to do with the information, not knowing how to place it, and what good is it. We can revisit that question in a short while. Someone is asking, I'm curious to know what trading instrument would be your first choice to pass prop account, considering frequency and repeatability of setups. Now, that is Tejas D, with a number. What would you say, Samir, to this question? I
Okay.
have my answer ready, but go ahead
Okay. Let's
if you don't
let's
mind.
see. I am curious to know what trading instrument would be your first choice to pass Profam accounts, considering frequency and repeatability of setups. So, to answer this question, I would say the way I passed my first account was I was focusing on 3 to 4 pairs, and it was all major pairs. So, my advice to you will be focus on major pairs. If you want to look like other side, you can trade indices, and of course, we don't have many indices, so you just have to stick to the major ones, which is NAS 100 and US 30. And if you are a forex trader, just stick to the major ones. Why? Because little bit like price action is little bit cleaner in those major pairs. And if you ask what are the major pairs, then they are Euro USD, GBP USD, AUD USD, some kind of USD pairs like USD JPY, all these pairs. So you will have some cleaner price action if you focus on major pairs, which I just mentioned, now, and the approach to pass the Profam challenge will be, just focus on the risk management, and just take one trade a day, which I see, in every stream. So these are a couple of things you can do to pass your account. Focus on 2 3 pairs which are majors, and focus on one trade a day, and take just 1% risk, or maybe below. If you have, if you are building data, if you are new, then you should risk 1% or below. You should not go with more than 1% risk. And again, if you have a little bit of experience, and you are coming from different asset class, and if you just want to know what kind of instrument we trade in prop firm, or what kind of pairs you can trade, then of course major pairs, and then maybe you can work with maybe 1% risk or 1.5% risk. So that's how you should approach. And yeah, I think you can pass your challenge this way: just 2 3 pairs, major ones, one trade a day, 1% risk, one strategy. That is it.
That's some solid advice, especially the one trade a day. I think is a great thing to begin with, because already it addresses the one of the first difficulties any new trader faces is controlling the expectation, controlling the excitement, not getting too emotional. And one trade a day, helps you with all of those things, because it slows you down. It puts clear limits. It's very clear. There's no misinterpretation in that rule, and gets the job done, and forces you to trade again only tomorrow, win or lose, and that will make you, will force you to have a fresh mindset the following day. At least for most people, some people can still be affected on the next day by the former day result. But still,
Yeah.
I think it's a great advice for everyone to follow when they're starting out. The person asked about the instrument. I think what you said as well is very interesting, or not interesting, but very on spot. The majors, one of the majors, all the pairs that are, has the USD in it, either at the front or at the back. Um, the All the majors have at the fivers, but on all brokers, but especially at the fivers, has a very low spread. And spread is a cost of doing business. So as with all business and all occasions, you want to have the cost as low as possible, because it eats in on your profit. So uh, and at the fivers, it's EU, GU, or a lot of the times it's 0.0. There is almost no, there no, not almost, there is no spread. The spread is zero, meaning that you're paying very little on transactional cost, only commission, and almost always no spread. There is other moments in time, Asian session, you may have a one pipette or two pipettes of a spread, but in any case, that's the best market conditions you can get. That's why starting with the majors is a good idea. And in terms of repeatability of setups, I don't think um, there's any clear. I like EU and GU, and but the price action that I trade, they also happen all the other pairs. It just happened to be that those are not as volatile as, let's say, a yen pair, or let's say a cross pound yen, or maybe kiwi. It has a different characteristics in volatility, and that's the difference. But the pattern, they still occur on those pairs as well. And the variation is there's no clear. You can't really say there's one pair that the patterns are repeated more often than not. It comes and go, if you compare that in through time. So that you may, let's say, you may see that in 1 month it reacts better to a certain pattern, but if you go back in time, that's not going to be one single pair that's always being more repeatable in patterns. So I would say, just stick with the one that are more efficient, less cost, that are on your time, the trading window, meaning, if you're in Europe, you want to be trading likely a pair that has a currency, a European currency in it, because that means that in the European time frame, or time period, uh, you will have the biggest moves. Those are the considerations to be taking into account when you're starting. Someone is asking, when are we going to start the futures in, or at the fivers? We don't have a fixed date yet, so keep pending. Soon, very soon, you can see it on the website as well. We have things almost ready for the launch, but still have to be a little bit more patient. And sure, there will be futures launched at the fivers. It's going to be great. As Richard said, the 10th anniversary of the fivers, it's going to be huge. Actually, it's going to be huge because there's only one time that you, let
You
me
just
switch to
got
my screen.
yeah, now it's good.
Is it better now?
Yeah, you just got frozen for about 3 seconds, but now it's good.
Okay, I switched to mine, right here. Let me double check something. We had an H4 order block that was retested right there. Perhaps we should take a look at it. Let's take a look. Maybe let's switch. I'll come back to the markets. So on the higher time frames, let's do a little top down, a short top down. We have a reversal pattern which is in the direction of the trend, meaning a bearish reversal pattern, in where in the direction, it's a bearish in the direction in a downtrend. You have a left shoulder, head, neckline, break out of that structure, usually comes back, creates a right shoulder. That's exactly what it did. Expanded the pattern and is trying to come back to make a possible second right shoulder. We have two structures that are possible candidates for the reversal, and one of them we're currently retesting. Market is reacting nicely, technical on the first attached or first retest, the second one as well, and we're retesting the second retest, which created an order block. That's the monthly time frame. If we go to the weekly, do we have alignment to align? Meaning, is the weekly aligned with the monthly? Not exactly, at least not yet. The market has not broken any structures on the any structure on the weekly, and there are no um, recent fresh order block that has been created. So we'll have to wait for that weekly to show its head. The daily, let's go to the daily there. Now it gets interesting because we have two patterns. We have one pattern on both side. Let me show you. This is the bullish pattern. Both of them are reversal. Both of them are the quasi. This is the bullish pattern that just today we got into the retest of the daily order block that was created after the retest of the entry order block, right? So we have this is the reaction we had not long ago, right here. And the market did what? The market reacted as it should on one of these entry order block. Very predictable, very repeatable for that viewer who was looking for repeatability. The order block created, the reaction created a fresh order block right here. And let's take a look at it. That's the daily order block that was retested just now. That's why I switched. So if you look, this is the supply area created by the daily order block. We do have a entry order block below us, but that one has already done its work. The market has left an H4 order block, so you could be waiting for that order block to be retested to get your entry. However, we have already some good reactions. We had this morning, or during the Asian session, we had the H4 order block right here being printed, created Uh, yes, the order block being created on the overlapping the daily, as you can see on the Asian session. We do have another H4 order block for for future reference if price does not hold the first one, but the first one is already showing signs of what we would like to see. This is an outside bar that created the order block. Those are um, you know uh, especially interesting. If you look at the H2, there isn't anything for us to trade. On the H1, however, we have a fresh order block that is overlapping the H4, meaning it does not refine the area, but it does. Let me mark this there properly. Let's mark this properly. This is very interesting. That's why we switch from the chat to go to this, because this is exactly the moment you want to be catching these moves when it gets back with the daily order block, the H4 order block, and in another hourly, and it has these huge reactions. Of course, that was the news, but still the pattern is right there, right? That's the H4 order block being reacted, helped by the news, but nonetheless, let me double check something here. So this was during the Asian session. So the pattern, if we have any pattern to be traded, needs to be, let's take a look, needs to be, all right. So the reversal pattern, this reversal pattern is no longer useful. However, the area is very interesting, so you want to be watching. Did we create a new quasi? We can't trade it yet. This would be the neckline, so it's a perfectly valid quasi to be traded. It is 6 minutes after the news, so you can trade it even if is a news restriction. That's no problem at all. So let's mark this as the 5 minute order block, I mean quasi, and that will leave us just with one order block, at least entry order block on the whole pattern. That's a not a very not a very fast one, but hey, it is what it is. Let's take a look at the market. All right, so what is the market doing? It's retesting the upper border of the area of interest. Seeing that, this is the area of interest. It did have a little squeeze before the news. That's the area where it came back. Right, so we have the first initial move, which can be seen on the H4, a very immediate retest on the following structure. That's very interesting. Let's take a look at what else we can see. All right, so on the, hold on. All right, so on the, we still have to be a little bit patient to wait for more data. The first initial reaction was bullish, as we can see on the CPI, that is, but is it going to hold? There isn't anything, any structure for us to use, because that was just a huge impulse, huge candle. Let's measure how much that is on the 1 minute. That was including the whole range, that was a 24.9. So that's a clear indication where the initial intention of the market is. However, we need to wait for if it is normal for price, once the news is out, to have the initial reaction. Usually there will be a retest of some structure where the move started. On the 1 minute, that would be this area. On the 5 minute, it'll be a little bit lower, but sometimes that's that could be front run, and the market could start finding power before that and then continue. That is, of course, if the area is defended. If it's not defended, then you will see weakness coming in. Price will go up, make a lower high, and keep breaking the previous low, and keep doing that. And if this happens as well, and then eventually goes through it, faking everyone who thought this would go up. we'll still have to wait and read price action because it's not entirely clear which one of the two. On the daily time frame, from my perspective, the market can go deeper without breaking the structure for the buy area, for the buy setup, the buy idea, because we actually have a daily supply zone below. So we have two, in my opinion, there are two scenarios for this. Price actually going lower and tapping into this order block again, and then buyers coming in for the continuation into some structure, probably the order block above us. And the other one is that the market just needs the fresh order block that we already retested, meaning this area. That could be a little bit lower where the H4 order block is, not necessarily so tight. It could squeeze a little bit, maybe do something like this, even squeeze that low and then go higher, right? Pick some liquidity for everyone who's in the trade, and then going higher. And of course, it can, switch direction earlier. The initial expectation is, of course, for a bullish, because of the initial reaction was bullish, to expect for some follow through movement on the bullish side. But hey, let's wait for what the market does. Very interesting. Samir, how is on your side? Are you waiting? Are you seeing something? Is the NAS setting up for you as well?
Yeah, I'm just seeing my trading view is doing some tricks here. Let me refresh my tab here. Okay, now it's good. Yeah, it is just, I think it has liquidated the high. We might can see momentum to the downside. As you can see, we have liquidated these highs. So now this is the trend line. I want to see price close below this so that I can sell something like this. And how will I position myself? Something like this, you know, something like this I'm looking at. And if I has to plan for buys, then of course, price retrace and again close back to the upside. That will be, a buy signal, because I'm just waiting to see where the market is, how the candles are closing. Basically, if candles are closing, bullish and to the upside, which means buyers are more interested, and I just have to take opportunity. I just have to take, my position in that particular side. So I have to see where the candlesticks are closing. Right now I only can make some, hypothetical analysis, like this happened, but the actual entry signal is not there yet. I just can do my analysis, but I can make few scenarios. If this happen, I can do this, like I mentioned. If price close below this, I can sell. And if we sustain this area and then we closed above, then I'm gonna be buying this. Hopefully I enter the trade live here. Let's see how it goes. Yeah, I go for one to ones. That's it. Since I shifted to one to one, I'm taking more payouts. My payouts are a little bit more frequent. It is just my personal opinion and what is working for me. I'm just sharing with you guys. So maybe you can test this thing and you can see how it works for you. So I'm just going with one to ones and let's see how it goes. Again, closing below sells. If we sustained and we stayed above, buys. And on the NAS 100 side, it is similar. If we close below this area, I will be selling. If we sustained above, and if candlestick closed above, I'm gonna be interested in buys. And I can wait. I don't have any option. I have to wait for right now it is 7:13 according to my time zone. I have to wait to 8 p.m. so that I can plan my trades. And still I have to wait for the candlestick to close. 8 p.m. doesn't mean that I will take the trade immediately. And so I still have to wait how the candlesticks are closing. So let's see, these are two buys here. Right now price is in the middle of the range. Let's see if we sustained, or if we don't sustain here, and then we can come to the downside. Of course, the NYSE session brings huge volume, and I'm not going to be surprised if it closed to the downside with a big candle. So then I'm going to be taking sells. So yeah, let's see. But for you guys, I might can let's see some analysis here for you guys according to my strategy. Let's see how other pairs are doing. For that, I have to move to the higher time frame, which is the daily. Daily, we are rejecting from these areas. I'm just gonna make a big block right here because we have reactions from here. So price is in that reaction zone. So now if we go to the 4 hour, price is definitely trending to the downside. As you can see, we have kind of a waves to the downside. So considering this thing, I think the momentum or the buyers or seller, whatever you wanna, however you wanna consider this thing, sellers are more interested in this particular leg. So I will be looking for shorts in this one. To short this, let's find some confluence. Um, I don't know what is wrong with my trading view. This again happened. Let me refresh it. My internet is perfectly fine if I'm not wrong. Yeah. Okay, so that was the, let me draw my zone again. This was a big block right here. If I go to the 30-minute, then price is retesting this area. How will I plan to take a trade? I think breakout of this will be fine, which will, give me a sign that yes, sellers are interested. So breakout of this will be good. And if we retested this and, we got upside to the upside, then also I cannot take buys. I have to wait for price to retest this area, then do something. So I am interested in sells in US. There is a euro USD actually. So if we close below, that will be good. So yeah, I think GU will also be the same because these pairs are somewhere same. Let's see what GU is trying to do. Okay, let's go to the daily time frame. Okay, GU has a different story actually because we took this as a support. So now price really closed, like a bullish engulfing right here. So if we go to the 1 hour, then we are printing bullish structure. So these two pairs are not correlating. So for that, let's check DXY once, and then I may can give you the solid buys. Like if I'm looking for sells or yeah, it is reacting from this area. If this is a buy, yeah, I will keep euro dollar for sells. Yeah, which is this pair. Yeah, I will like to see momentum to the downside, maybe at least to these lows or maybe this area. Let's see how it goes. But sells looks fine to me, and the confirmation will be below this area. Selling below this area, that will be perfect. Yeah, and next one.
Basically, that's a breakdown entry after, if you're selling after the supply zone failed, because that's what we see there, a supply zone that is being retested
Yeah,
multiple times and likely to fail according to your bias in your reading of the charts.
yeah, we are making waves to the downside. So I do think we can get one wave. Even if we had to go to the upside, I think one wave we can print. Then we make and shift buys, something like this. But this is a very fresh wave. One, two, three, four. I think fifth wave. This is some kind of Elliott wave type of thing. I don't really use it, but if price is moving in certain direction, there is a high chance that we can get to one impulse push, uh, you know, um, to the downside in this particular case. So yeah, let's see. But again, this breakout will be selling zone right here. If we sustained and if we break to the upside, then yeah, there will not be a buy immediately. Still, you can wait for some price action, some kind of correction pattern that I mentioned. So yeah, we'll just wait for some kind of correction pattern. That will be good. Some kind of this move, this kind of similar move here. That will be perfect. So yeah, waiting game here. My session is gonna start in about 40 minutes, 42 minutes. So I have to wait.
We have EU on a little update on price action on EU. Even though on the higher time frame, I also agree that we have reasons to believe for that EU might need to go lower, because that's where the order block, the H4 order block, where it all started. from yesterday. However, we are creating fresh structures to jump or to start off with. We have
Hmm.
an outside bar here, as we discussed, which has overlapped on the daily. The hourly as well is looking nice for a long. But the thing is, it needs to get follow through. It's not getting that follow through yet. If it closes like so in 22 seconds, if it closes anywhere near the open of the previous candle or below that, it's getting increasingly bearish, meaning it's going to be squeeze. If
Okay.
it keeps on squeezing the market even lower, right? There it can still there's still structures left. It's not over yet, but we're have to wait for that reaction. If you look at the hourly, we made not the hourly, the minute, we made a lower swing high, a little swing high there, and we're not making lower lower lows on the microstructure. It's still too early to say anything. Um, you want to be seeing the market creating uh, and breaking these levels. So far, this is what we have, right? We don't know yet what it's going to if it's going to break this level or not. But this should be your first indication so far, of market, what it will do next.
Yeah,
You
that
create
is
these.
also a good wave right here. If we follow through, as you mentioned, then
Hmm.
definitely there is a room to go to the upside. But
Hmm.
again, if those levels that I mentioned, if price closed below that, I think that will indicate that sellers are more interested here. If buyers are interested, then definitely we will see a follow through right here.
Exactly, and that's the thing. You could form your bias, everyone as a trader, but you need to wait for the market to confirm that your bias is actually being played out, right? You don't go blindly. You wait for the setups indicating a more acute recent intention of the market, or setting up for, that's why it's called setup, for a certain direction, whether that's with the bias or against it, and then you wait for the actual reactions, right? So the patterns, let's say a double bottom or a quasi, it actually needs to trigger, needs to come back to the area of interest, and then react, the way that you expect it to do so, to give you the signal. So we right now, it's a matter of just waiting. Is the market prone to break this little rangy area here or not? Is it going to break down? Is it going to break out? We'll have to see. So far, buyers are not actually coming with the follow through movement. Looking quite weak, but we'll have to see. The market has a thing to, make you believe something while the candle is still open, but you still have to wait for the close, to make it definitive.
Yeah, let's
So
see
let's
where
wait.
it goes.
In the meantime, we can take a look perhaps at the chat. Let's do that. Poetic Lee says, "Can we copy these traits?" Poetic Lee, that is actually, we advise not to, right, for different reasons. One is, the FIFRS, the rules, terms and condition of the FIFRA tells us that you are not supposed to take any trades in cooperation with other traders, meaning you should not have the same trades. Uh, Two different people should not be having the same trade. If they have it too often, that could be a reason, to look into that account more often, because we want, at the FIFRA, we want to actually have independent traders, not traders who are just copy other people. That's one thing. So if you're trading with the fifers, it's not allowed to be copying. The other thing is, from a more holistic, long term kind of a view, as a trader, you do not want to be copying others. I mean, if you can, uh, uh, no one is stopping you, right? I'm not watching what you're doing, so I wouldn't know if you're copying. But that's not the best path to go about it, because what you really want is you want to copy not the trades, but perhaps the mindset or the approach. The use it as a template, maybe a principle or a concept that we use. Not copying the trade, as I said, the entry, the stop loss, and the TP, but why am I entry? Why am I interested in this area? Why is Samir interested, or why is he waiting? And when you understand the principle behind these behaviors or these actions, that's what you should be copying, not the trades, but the concept. Because that's, if you it's like fishing. If you copy, you get the fish, but you don't learn to how to fish. And we want you to learn how to fish so you can go fishing by yourself and not needing anyone else for your daily meal, so to speak. So but there's no one stopping you. I mean, there's no copy trade police coming to your house and telling you have to pay fines because you copy. But it's your own responsibility. I mean, um, if you want to be a consistent, independent trader, you want to make trading a career, then copy trading is you shouldn't be interested in copy trades at all. All right, um, let's take a look at
We have someone asking about Heikenhashi charts.
yes. I
Yeah,
saw that.
I am not really aware about those things. I've seen a couple of YouTube videos like 3 4 years back, but I have never felt a need to try this thing. So no, I haven't tried this approach, Heikenhashi candles or Renko charts. I don't even know about what is this Renko charts. I am completely unaware of this.
Yeah, I mean, I'm in the same boat in the sense that I've also had some exposure to these different chart types and candlestick types. They're not actually candlestick, but I mean price charts being depicted in a different way. Um, However, there's so many things, there's so many indicators, and so many things you can do differently, and so many tools out there. You don't have to master all of them. And once you have, in my case, to me, uh, the profits were in going into depth, not knowing a lot of things to a certain, superficial, maybe medium depth, but becoming a specialist in a few things and using those few things as best as I can. And that's where I found profitability and with time consistency. And I have no need to move away from that. I am so I wouldn't be able to help.
All right.
Right.
Euro USD is trying to go to the upside. Let's see. But
I'm gonna
okay.
take a look. Yeah, we're still in the same range. However, indeed we can see that the market is did have a you could consider this. Let me see if it is technically this is a 634 actually. So there is a quasi here. There is a reversal pattern right here. It's on the 1 minute. It doesn't have actually, it does have the hourlies added, and I would be interested in getting in here, right where the arrow is, right? So that is the quasi. Let me double check something here. There is, yes, this is a valid entry. This is a valid quasi. The entry would be price coming back and hitting this area. I know it's quite big, but then again, it's the 1 minute. So the stop loss would be below the head. There we go. If price comes back, this would be the area that I would be interested in putting the stop loss below the area, and then targeting the height before. That would be a little kind of a scalp using a quasi. You can target the height. That makes sense. The one before the retest. if it even comes down. It doesn't seem like it wants to come down. And then the next area, and obviously everyone is looking for these highs to be taken out as well. So you can take your pick, see how ambitious you want to be with your target. But I would want to see the levels being retested before getting in to get on a good level. Let's take a look at, there is nothing on the 3, on the 2, on the 1. So it's also a 2-minute order block, right? That is fresh if it gets retested. That's also another place you could consider. It's not an entry order block, but just a 2-minute. I don't think I have a 2-minute. I don't have a 2-minute, so I'll have to create one. There you go. Right, so a 2-minute structure, and I would wait patiently for the market to retest that before getting in. All right. Do we have it on the hourlies? The hourlies is closed, and let's take this arrow away. Did we close as a bullish engulfing? 82684. This is a borderline, but I do consider this to be all right. So that to me is a sign that the market is favoring going higher. And that to me is a reason it can still come back and retest this area. But to me, now we have, if you're using the hourlies, you could, enter, where after the close, put your stop below that. That's a 20 pip, and you target the next level that makes sense on a time frame, that not this one, that would be a negative risk reward ratio, but the next level, which would be the high of the previous swing high, which would give you a 1.48 at the, well, actually a little bit less than that because the market moved a little bit. But you can put your limit order, if the market, because the market is, just closed and is likely to retest something a couple of pips lower, and it can grab your entry, or even this, if you want to go to the lower time frames, get it in, put your stop below the structure, the microstructure, or the whole pattern. The whole pattern being putting your stop below here, right? So you could use the micro pattern as as your entry, putting your stop below the whole area. That will be the head. Let me double check something. Do we have 50% retracement? Yes, we do, but we don't have any entry order block to use from the left. That's a pity. So it's not actually the quasi that you're trading, just fresh order block being created, and a smaller quasi right here. Right, that's where the reversal pattern happened on the 1 minute. Very tight, very surgical, with the pattern, but it's still, but it is valid and it is tradable. All right, let me double check something here. I think we can hear your mic, Samir. When you're moving, I think it cracks a little bit. At least I can hear it.
Now
Let's
it is
take
on
a
the
look
table.
at. Let's take a look. Yes. All right. So let me go check the chat, because I think there were a couple of other questions we had. There was Humphrey, right? Humphrey, the question we received. Let's take a look. Okay, so what advice can we give Humphrey? All right, so I think that was a question from before. Okay, so Humphrey Kariuku or Kariuki FB, my friend, uh, he says, I need help here to say the truth. I don't know anything here. All right, so you're a new person to this stream. Thank you for coming in and watching like a movie. He says, I have zero experience zero knowledge on this. My mentality is strong. I want to ASAP. You want to learn, I suppose you mean to say. Um, well, one of the first thing is you're taking a great step by watching and getting exposure from other traders. Um, so that's great. Stay here and spend more time, ask more questions. There's another thing you could do is get to our Discord community. We have a Discord community where there are other um, members just like you, or people who are more experienced, or sometimes a lot more experienced, that will be happy to help you out. We have sessions in our Discord every weekday where you can come in, ask your question in real time, just like here, and have a conversation with the host or some other members who might be able to help you, give you some idea, share strategies. You could share your difficulties you're dealing with in trading, and they would maybe able to guide you. The other thing that I could give you as advice, as you said, you have zero experience, zero knowledge, is to educate yourself, right? Before you start putting money in order to get to the Discord, you have to buy an account, but you can buy the smallest account at I believe it's at $39 a piece, the smallest account, which gives you access to the Discord community, which is free, but it comes with an account. What I would do is educate yourself, meaning I wouldn't go randomly watching things online, because that could, teach you bad habits sometimes. But I would go to Baby Pips. There's a website called Baby Pips, and even though it's been there for a long time already, for many years, it still has a good knowledge base for you to learn from. It goes through different topics, and you get a broader idea of what we're talking about and what we are dealing with. Forex in general, trading specifically. Um, and then I would, you know, try paper trade. I would say first paper trade or demo trade. Trying different strategies. Once you have gone through the the let's say it's a sort of a course on Baby Pips. Once you go through all the lessons, go online and see which person, which coach or the trader out there gives you an idea that makes sense after you've read read all the content on Baby Pips. Uh, and then start collecting data, start seeing, looking, observing the market, having some screen time, and writing down, you know, diligently what you think is happening. Double check that if whether or not the market actually is doing what you think. Let's say you watch a couple of hours and you think, well, the market seems, because of this and that reason, I think the market is going to go up. Write that down and wait. Watch again at the end of the day, or maybe the next day. Did the market do what you think it would do? Did it? And if it did it use perhaps the either the indicator or the structures, price actions, or liquidity, or whatever concept that you might be learning? Did it use those concepts in order, in its way up in the direction or down in the direction of your that you thought it would go? And if not, then write that down as well. And after a couple of days, a couple of weeks, you can go back and see, all right, does this concept work for me? Am I applying it well? What am I missing? If it's not working, ditch it, look for something else, and keep doing that until you find tools that resonate with you, and you start building your toolbox that way. And once you have, confidence that you're able to actually read the market, then you start actually putting real money to the test. Not before, otherwise you'd be just throwing money away. Those are my quick advices, Humphrey. Please let us know if you have any other questions. Come back to our chat anytime you wish, and we'll be happy to you know answer anything you might be dealing with, trading related, of course. All right. Checking the chat again. If there's anything here, We are on a mission to reach 100K subscribers, and you can help us. Yes, you watching us here, maybe you're commuting, maybe you're coming back from work, maybe you're still in bed. Who knows? Maybe wherever you are in the world, it's still very early. You're in bed watching us. Subscribe to the channel. Be part of this movement and help us reach others just like you to become a trader, profitable trader, and a consistent one. That's our mission. Okay. Someone asking here, asking myself, thank Bucko, asking Victor, spell the technique you use. And the last question, do you trade all time long, all day long, or just one time window in a day like 9:30 to 11 New York? Tambuco. I will visually explain how I trade. Let me do that. So what I do is using two patterns, and I'll tell you all about it. One is the engulfing, well, actually not engulfing, the order block, which is the market indicating one side taking control. This is how the price action is, and this is how it looks on the. Let me mark this with a, let's say let me change time frame, because, or maybe I can use the hourly here as well. Let's use the hourly. Okay, so that's not very visible. Let's use something else. There, that's not very visible either. Maybe that's better. Well, let's just carry on. The order blocks being created, which are either being created by a engulfing or a outside bar, and it creates, it leaves behind an order block. I'll in the coming days, perhaps I'll go through how to market and what is and what isn't an order block to me. And the whole idea is that once the market does this, sometimes it continues without looking back. Those days, I do not get an entry. I don't participate. But whenever the market comes back to retest the area that it left behind, that's the cue for me to get in on the market. And what I'm looking for is the market to come back to retest that area and then move in the direction of the initial impulse, right? So it would be looking something like that. You will be getting in within the area of interest and targeting a high that makes sense on price action. This is one concept. This is the order block. The other one is, which is based on engulfing or outside bar. The other one is the quasis, right? This is let me put it the other way around, right? So the bearish one, which is for those who are new to trading, that could be, you have the head and shoulder, which is quite symmetrical. Let me do it like so. That's the a very common pattern in the market, very useful. Actually, one of the probably the most popular pattern. You have the left shoulder, the head, and the right shoulder, and you have the basis of each shoulder, and it's basically a reversal pattern, right? The market has a pattern of higher highs and higher lows, meaning it's an uptrend, and then changes into a downtrend. You see the lower highs and lower lows, a reversal pattern. However, what I trade is not the head and shoulder, which has a high degree of symmetry. What I do is I trade the quasi, which is not symmetrical at all, but it still holds roughly the same kind of principle. The only difference is that the base is not, it's not necessarily equal. This could be a quasi already, and I would then consider this to be the neckline, very important in the pattern, which is also a reversal pattern. The left shoulder, the head, the neckline, price breaks at first, goes all the way down, and then comes back for something in this leg, from the bottom to the top of the pattern, something in that leg that will likely move price back, and I would then combine it with other structures like the order block to get the area of interest within the reversal pattern. So I use those two. So order block and quasis, and I combine them from the top down all the way to, from the monthly basically. I try to look for alignment all the way to the 1 minute, and with certain combinations of alignment, that will give me the cue to be able to get in. So that's how I trade. And the first question, or maybe that was the last question: do I trade all day, or do I have a specific time window? I have a time window, but the time window is basically all day. It's actually from London Open, around London Open until London closes. So it takes the complete session of London, including obviously New York as well, a couple of hours. That would be if I'm at home and I have a usual day. Sometimes I'll have to cut my day short, of course, because I'm my own boss and I can do that. That's what traders love about trading. It's the freedom, the time freedom. I can say, we all can say as traders, I don't want to trade today. I want to be, let's go do something else. In reality, we love trading and we will be trading anyways. But you have the choice. You have the choice, and you can do so whenever you want. Um, Prana Kumar has a question. I think that's maybe you have a answer for this, a better answer for this, Samir, since you trade
Let's see.
equities.
Newbie here. What is good alternative to ES if I have CFD account from Fivers? So ES, you can trade NAS 100, which is NQ if I'm not wrong, in futures, and US 30 is there, which is I'm forgetting the name in futures, which is MNQ maybe. Sorry, MNQ is the NASDAQ. It's MYM. It is mini YM. Yeah. So there is YM also, which is US 30, and NQ, which is NAS 100. And you can do that in the fivers. You can focus on these two indices, and they have the similar behavior as ES. Of course, there will be a little bit of changes in lot size, contract size here and there, but else is same. The platform is different, of course, and futures they use different platform. But in forex or CFD we have MT5, which is I think easier to use than those future platform. So I think you can stick with the NAS 100 and US 30, which is YM and NQ. So that will really, you can have a really good price action in these pairs.
Yes, and ES is the future for S&P 500, right?
Yeah, actually, the point is that your lot size will be way too big if you take that. It is S&P 500, and the contract size of fivers is 1. So if your stop loss is like 10 points, I think you have to enter 100 lots. That will be your 1% risk on your $100,000 account. So considering that thing, that's why I recommended you NAS 190, because I don't want you face any trouble. You are using tremendous lot sizes like 100 lots, 200 lots, based on the behavior SPX have, which is they have one contract size, and you have to use big lot size. And I know future traders are familiar, or they are into scalping and all. So because they have to close their trade at the end of the day, so you have to, that's why I recommended you NAS 100 and US 30, because the point value is a little bit more, and you use decent lot size. So that's how you are not really using a big lot size, or you are not really overexposing your account. So that's maybe how you want to call it. So yeah, just stick with these two. Price action is same. So yeah.
Emmanuel has a question for me. He asks, "Are you using supply and demand strategy?" Emmanuel, yes. Basically, when I talk about order blocks and quasis, they are demand and supply areas, just on a different time frame. In the case of the quasi, that is, it usually these quasis they happen within an area where, a bearish one within a supply and a bullish one within a demand. Is the market trying to reverse? And you see these on a higher time frame, you'd be able to see them, or just zooming out, you'd be able to see them as supply and demand. Order blocks are just that as well. They are areas where one-sided to control, and that's the supply area, right? If it's sellers to control, right? Because sellers came at the area, and we consider that to be a supply. There's over supply in that area. When price gets back to that area, it's likely to be sold off again. And conversely, on the demand area, you'll have buyers already indicated previously by creating other structures that they're willing and able to push price up, and whenever price comes down into that demand in that area that we then call demand. And it's basically the same. And you will see where normally other people not using order blocks would be identifying supply and demand. I would go there and label roughly the same area with my order blocks, meaning the overlap is basically the same concept, just a little slightly different how to mark them. I consider my areas to be very, very objective, right? When you see supply and demand, people tend to go a little bit, uh, mark them a little bit loose, in the sense that where it starts, where it ends. They know it's around there, but the line might be a little bit high, a little bit lower. To them, it doesn't really make a difference. To me, I can pinpoint, because I use OHLC data. I can pinpoint exactly to the pipette where the level starts, and until then, I will not be trading, and where it ends, and so on. But it's basically the same thing. Great question, by the way. We have plenty of questions here. Um, HK has a challenge for me. If gold touches at $10,000, please reveal your face in live stream of the 5%.
We have another condition. If we have 1 million subscribers, then Victor is gonna do that. So help us reach 1 million, and Victor is gonna give you his identity.
Samir, you're committing me to something. That's very interesting. I will. Who knows? Shall I? Shall I? Will I? We'll have to see. Um, Someone here from the Philippines, W. as Rivera. Thank you for coming in all the way from the Philippines. We have people from all around the world, from Africa, from the United States, from Europe, from India, from all over the place. Thank you all for tuning in. Don't forget to support our channel by liking this stream and subscribing to this to the channel. One question here
Yeah.
for Sasa Dobrijevic. I hope I pronounced your name correctly, my friend. Sasa asking, what is your aha moment in Forex to start being profitable? That's a good one.
That's a good
I would
question.
say, yeah, it's a good one. I would say my aha moment was um, that when I start when I start doing analysis on the data that I was collecting. To me, that was the aha moment. That was the first moment I said, I figured it out. It's not that I have the key to the market, all the doors of the heavens will open, but it was the first time that I felt, and I knew I had a grip. I knew a way to actually objectively know that I have edge, and a process to go about it. And that happened after I did. I had a What I did was I made the strategy that I was using. I broke it down into a clear, objective trade plan with clear, checklist what needs to happen before I can enter, and I only enter after everything is met. And then I go measure many different aspects of how much does the market go in my favor after the entry, how often does it go against me after the entry, and how many times after the stop loss does it reverse, how many times does it reverse when I hit my TP, all of these things together, and I start optimizing the information, and I synthesize basically a profitable system out of it, and then I go back test and forward test it. And when I got the results back, I say, all right, this is how you make it. It's a template. It's not the I still knew that I need to figure it out, you refine the rules further, but I saw that. I said, oh, I got it. This is the moment. And that's my falling in love with data collection and analysis, because you know I'm a strong believer that the easiest path to reach and maintain consistency, profitability, is through being consistent with your strategy, which is rule based, and sticking to whatever the data is telling you. For as long as the data is telling you that this is, the trade plan that is profitable, you've done robustness tests in the, from your historical data, you do out of sample tests, and they are consistent. That's the way to go forward. If it isn't consistent, you have to figure out what's happening. But as long as you can do in sample and out of sample testing, still the same results, and you're following your rule based system, that's the way for me, and it hasn't changed. I don't think it will ever change, because that's how I know how to be profitable, and I've been profitable for a long time already, and I reached consistency, about a year and a half after that aha moment happened. That's a great question, actually. I like that. And after the initial time that I saw, you know, I understood that, okay, so this is how, just like a scientific method, right? How do how are uh, scientific experiments conducted, right? You have an observation, you have a hypothesis. Based on the observation, you go out and test it, and you see if the results, I mean, are confirming your hypothesis, or they discard it, or they don't confirm, and you build on that. Maybe you don't have the strategy right away, but it tells you to discard this. It doesn't this concept does not have a predictive value going to the future, or it does have a little bit, but only on certain conditions. And then you build upon it. Okay, so how, if I have the direction, what can tell me where to enter? You build different ideas, you test all of them out, you pick out the one that is useful, and you add that to the system, and so on, until you build the whole system. That's what I did afterwards, after the first initial aha moment. I like that. I like that very much. Let's take a look. How is EU doing? EU is breaking a little bit. Let's go to the chart and then come back to our areas, not areas, to our chat. Right, the market is having a little bit difficulty. We had um, we had a daily order block, right? Actually, let me paint the picture, a complete picture. We had a daily entry order block, which is this area right here, right? That's the initial reason on the daily time frame why we had this move, right? This impulsive move that happened on the beginning of the week. And with that move, at the end of the day, on Monday, yesterday, we created this bullish order block, right? That was the creation after the impulse. And automatically, you want to be taking the trade either when the initial order block, the daily entry order block, is being retested. That's one. Or structures that are created after the initial, right? So they're fresh structures that are being created after the initial move. That's this order block. Both of them are equally valid to be used. So so those are the basis of the daily time frame. If you go to the 4 hourly, the same concept. When we got to the daily order block, it created a H4 order block that is still a great area to be trading off. On the H4, is it still fresh? 4, 6, 8, 10. Basically, it's losing its freshness, but it is a part of a quasi. Look at this. This is the quasi neckline. So it's still an area. Now it's an entry order block on the quasi. On the H4, it's an entry H4. All right. So this is the one area that is based on the initial move, or you can get a fresh area, which is this one. Both of them equally valid to be traded. And then you go down the lower time frames to find the alignment. And the alignment was on H1, which didn't really refine, but if it's visible, then I want to be trading it. That's this area. You want to be trading from this moment. You want to be trading the long. Let's move this a little bit lower, just like that. In this area, price comes back, does not close below it, and that's the moment to get in on the 1 minute. That was the news, so it did not, the quasi that was created, that has been created. This is the quasi, right? As you can see, it's not at all symmetrical. That being the left shoulder, the head, the neckline. It only gives you one entry order block on the 5 minute for the price to move. But sometimes that's an invalid area to be waiting for price to come back if it comes back, and if not, you can use the same area. Remember, the area is here. This is the area to be using. Either the bigger quasi that I just indicated here, that's one, or you can use another lower time frame fresh structure that is as the market comes back into the area to retest it. And let's go back to it. We indicated not long ago, this is the area. There's the quasi right here, which may or may not be retested. So from the top, we have actually, that's not the quasi. This is the quasi, right? That's the break of the neckline. This is the neckline, left shoulder head, breaks it, and we're waiting for price to come back to this area and then move out. That's the idea. Either you target this, the high of the pattern, or the higher high, which is the top of the news, which makes sense because if the news, the initial move was to go up and then it reverses, it's likely to be continuing to its daily ATR, which we can also project for the day, which is, let's take a look. The daily ATR is currently at 48. All right, so that is current price action is 27. So basically another 20 pips push. If it breaks the current range, that means that we can target let me mark the range. 48 would bring it all the way up here. That means that we can target this high or something before that. I would actually target before that blue line, because that blue line is the monthly time frame. But it needs to break and have follow through, come back to the area of interest, and then I would be able to take that trade. This would be one area which we could trade, this area, and putting the stop right under it or below the head. That's up to you, and targeting all the way up here. That would be a nice trade for me. This is let's see what the risk reward is. It looks like something like 1 to 2, almost 1 to 1.8, but it depends on where you put your stop. Obviously, if you put it closer, it can still get above 2. So that would be my idea. That's EU, I mean, not EA. Let's come closer. We still have 27 minutes to go on our stream. Guys, let's take a look at what do we have? How many likes do we have? Do we have a number on that? Maybe Remy can tell us. Let's take a look. I'm checking the number of likes here. How many likes do we have? Checking here. We have 143 watching and 240 likes. Oh, I think things. I thought you guys, 200 would be a challenge for you guys, for everyone in the audience. But you are already at 200 likes, 240. So, what do you say if we hit? Let's put a 260. What do you say? Let's say let's make a challenge. See if we challenge you guys. See if you guys can hit 260 before the end of the stream, which is in about 25 minutes. Um, that's gonna be a nice one. Let's see. WS Rivera is asking, what is better, low risk reward ratio and high win rate, or low win rate and high risk reward ratio? Rivera, there is no special like one fixed best, one size fits all combination. There are a couple of things you can say, however, that a win rate, the higher win rate is, the easier it is on your mindset, on your psychology, because who doesn't like winning? And a high win rate means simply you're going to be having frequent wins. That's good. That keeps uh, your morale high. However, I don't have a high risk win rate. Mine is around 35, and I've come accustomed to it. It's fine by me. On the other hand, I have a high risk reward ratio. So it's a thing of preference, but most of all, you should let at least you should choose a combination that works for you mentally. But I would tend to go with the one that has the highest expectancy. What do I mean by that? You can plot, take the same strategy and have different combination of targets and stop loss, and that will automatically will result in different win rate and different risk reward ratios. And you can have multiple. You can test out different set of profiles with the same strategy, same entry. You just have different stop losses and different targets. And then check the one that has the highest expectancy. That is expressed in R, by the way, in R multiples. What you do is you take every trade you take on, let's say, 100, 200, 300, or even more if you can. If each trade, each stop loss is 1R, right? So that's -1 if you lose the whole trade if it hits stop loss. And you convert all the results, the P&L in R, meaning if it went as much as the risk was, then it would be 1R, and if it went twice, that would be 2Rs, and so on. And once you have all the P&L expressed in R, you divide it by the number of trades, meaning if you had 100 trades, then you divide whatever sum, right? The total P&L after 100 trades, you divide it by 100. That's going to be your expectancy. That's a measure of profitability. Now you do that with all the different profiles that I just explained, having different combinations of stop loss and TP, where the entry is the same. Once you have that, you compare which one you optimize for expectancy, meaning you go look for which one has the highest expectancy, and then you ask yourself, am I able to trade this successfully, right? Is it something that it goes with my, can I tolerate having this kind of win rate or this kind of risk reward ratios? And if you can, that's what you should do. And if you can't, then you should look for another combination that you're comfortable with. But that is how I would go about it. It's not about a specific a specific, whether high or low win rate are better or worse. It's about optimizing your expectancy. Samir.
I'm just seeing the charts. I was just trying to log in my terminal on my other phone. So that's why I was looking here and there.
Anything on your side because NAS is open?
Yeah, I like this buy on NAS 100. The
Let's
concept
take a
is
look
very
at
simple.
yeah.
Okay.
Let's take a look at your screen.
Okay. Okay, the concept is very simple. We are just retesting this area, and if we are closing bullish, and I'm sure on the 1 minute there might be some pattern. Yeah, as you can see, some kind of trend line. I just want a 15-minute close, and of course the trend line will be broken. So I will be taking buy on this, and my stop loss will be 150 points. And I'm looking for a similar target like 150 points. So now we are moving ahead. So yeah, still my stop loss is decent, I think, below this low. I want entry, let's say somewhere around here. So yeah, the 15-minute is not closed yet, so I have to wait. This is NAS 100. It easily can reject and come here if I try to enter here. I have seen a couple of times. So I have to wait for the close of this candle, which is gonna be there in 5 minutes. I don't mind waiting. So yeah, let's see.
That's the spirit. DSC's FX says we will reach
Yeah.
100K very, very soon. Yes, my friend. And when we do, there will be a lot of giveaway, a lot of accounts being given away for free, all for your benefit. So hit the like, hit the subscribe button to make it happen. Unbiased Trader, a friend of ours, Unbiased Trader, here asking, do you guys have any specific day which you don't trade? I think you have a day you don't trade, right, Samir?
I like to avoid Tuesdays. So because my win rate is not been the best on Tuesdays, if I have to trade, either I will lower my risk to reward. It is actually 1 to 1, but some days I will take some negative risk to reward, or I will lower my risk on that particular day. So Tuesdays are not really the good days for me. I have, actually today is Tuesday only. So let's see. Yeah.
Speaking of it, I don't have any specific date that my strategy is, consistently performing worse. I will have losing days. I will have losing streaks. I will even, have deeper drawdowns. But there's no pattern so far. I've noticed that it's linked to a specific day of the week. So the way I go about these drawdowns is that I quantify them in advance with back testing, and I plan for them because I know they will happen, and there's really no way to avoid them. I try to minimize them by sticking to the plan, by having data to know what I can expect in the future. But in the end, this drawdown will happen. Losing days will happen. Losing weeks will happen. You just have to know in advance what kind of how are they going to be looking like, and accommodate your risk management to just your management to accommodate these days, because they're going to be happening. It's a given. Instead of fighting them and thinking, oh, this is why is it happening? No, embrace it. It's going to happen because the market breeds in and out, and your strategy is not perfect. It's not going to have perfect. It's not going to win every trade. So that's a very good. I don't have any specific date to be specific or to be clear on that.
Okay, totally.
On Bias Trader says if I manage to join live, I will go Mad style. Unbiased Trader, I'm not sure what you mean by that, but is it the looks? You wanna go as Mad Max, as the movie? That's gonna be your style, or do you mean you're gonna be trading like a madman? Uh, you know, very active and very impulsive. Let us know in the chat. The monkey wants us to look at GU and EU. Yes, let's take a look at EU. Actually, EU has given us a very nice price action in the sense that it broke the level that we talked about. So let me switch to that, and that tells us something. Before we were talking, there are two levels that the market, if the market is going to have continue in the direction of the initial move, right? this is this is This is lackluster. Look at the market, how long it's taking, supposedly to continue the follow through. Supposedly it was supposed to come back, right? Come back to this area of demand to push out, but it took a long time. Look at this. It's waiting, nothing really happening. That's a sign the market not being exactly very impulsive. Um, but if the once the in any moment the market has an impulse like this, the you know realistic, without considering the bias, which is bearish, I if you look at the trend and if you look at the entry order block on the daily, which I do, you would say the bias, the expectation for me is for it to continue go higher, right? Because we have a demand area, we have it reacted it created a fresh order block right here, and it's now retesting that order block. So I expect the reversal to kick in anytime soon in the next couple of hours or maybe a day or two to continue this move, this reaction we had from this reaction we have from here. However, if it's going to happen, there are two areas where it's likely to happen from. Either from the initiation, the area where the actual impulse initiated, that's one scenario. And the other one is the fresh order block it created on top of the daily, also fresh order block. So there are two things, right? Both of them are equally valid to be trading. And if we go to the lower time frames, we found an overlap right here, and where the market supposedly is trying to move away, uh, you know, up from that area using this pattern. If that is true, then there are two areas in this case also where it could use as jumping platform, so to speak, right? So it would be the 5 minute entry order block below, or it would be there isn't a 5 minute. This is a 2 minute, so you have to look at it through the eyes of the 2 minute. But look at what it does here, right? It closes below that. That's a sign. That's a clear sign to me that the order block is not doing its job effectively. Meaning, I do not want to be taking this scenario anymore. It may still go up, but that one is to me is gone. We had an entry order block there, and the quasi is now gone. Basically, we can take away the area, and the market is breaking down, right? We talked about this at the beginning as well, right? If the market from the top, the market makes a lower high, and the lower high would be a fact once it take out this low, which it did, right? So now we have a lower high right here, right? A lower high and a lower low, meaning the market is looking quite weak. It shouldn't be doing this normally if it really wants to go higher. So we'll have to see. I don't see anything in this to the left for the market to react from. So to me, it looks like the market needs something lower, and that could be possibly the structure below. Let's look at the 50-minute to see if there's anything. Yeah, you could see this is a 50-minute quasi as well. And although I don't trade the 50-minute quasi, you can definitely trade it. Nothing wrong with them. This is the 15-minute entry order block, and we could be waiting for price to reach this level, so then start looking for the reversal on the lower time frame, or maybe on the 15 also, maybe on the 1, the 3, the 2, whichever floats your boat. That's fine. The market, after pushing this low, it looks like a liquidity grab now, but to me, that's something I cannot. It's not part of my trade plan to take this along from me, even though it reacted nicely. If it breaks this high, because now it can create another another reversal pattern, right? So you have to be. Let me take this out. Uh, 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 on the 1 minute. Then we can look for entries order blocks on the quasi, meaning this would be the quasi right here, and then it breaks the high, the neckline, and then I can look for something for it to come back as it moves out. Hasn't happened yet. We have 11 minutes to go. Let me go check GU. Someone asked for GU, or is there? Do you want to show something on NAS, uh, Samir, or
I'm just
we
waiting
can
for some kind of
go
trend
ahead.
lines to get formed. Right now, we do have a trend line right here, but let's see if we break that or not. We have this resistance also.
All right, so let's break EU or GU. Is
Yeah,
on
yeah.
different time frame. Let's take a look. So we have a entry order block on the quasi on the monthly, a fresh order block on the monthly, same as EU. They were out of sync, but they are now, in terms of the structure we see, they are again in sync. So we expect, you would normally expect the market to move away from it on the monthly time frame. So that's not easy to see on the daily or the lower time frame, but you can pre prepare yourself for this move if you have alignment on the H4 daily and the weekly, for example, but nothing yet to be seen. We have, let's take a look. Do we have a outside bar here on the weekly? It looks like it. Is it? The low is 40.16. The close is 40.21. So there is no outside bar. Let me double check here. Is there a weekly? The weekly has been taken out as well. So there's no reason actually. There was a fresh weekly order block here that I just deleted. Was not respected. That's a sign. It's a bullish sign. That means the market, is likely or has a little bit better chance of continuing higher than reacting lower here. So basically, there's nothing here to trade, right? And on the weekly time frame, there's no trigger, no fresh order block, and it invalidated the order block that we had below. This isn't fresh, by the way, is it? 2, 4, 6, 8, 10. So yes, it isn't fresh. So I will not be able to trade that. Let's take the daily time frame. What do we have? We have the market on the daily being opposite to what the weekly is telling us. The on the daily, it did break a bullish structure, which is this daily order block, with actually tells us, it's a different direction. Tells us the market wants and likely to be moving back. Although after breaking it's kind of giving mixed signals, because after it breaks the bullish structure, it creates another one. So this will be the level now we want to be looking at, not the previous one. Um, and on the H2, do we have a quasi? H4, I mean, this is gone. These are gone as well. Let's take a look. This is not gone. Nope, it isn't. All right, so we do have a reaction on H4 entry or a setup on the. Actually, this is not too bad. Daily order block, this is fresh. We have a quasi right here on GU. Right, it comes back, it squeezes the head, but it does not it does not break it, and then moves out. Right, so basically, it leaves it's a successful quasi, successful reversal based of a quasi, and it leaves an area here of a lot of interest for us to trade. That's on the H4, right? And this line, this right here, is also interesting for a possible retest of that close, because this is the first time the market confirmed, after sort of manipulating price action first, it closed with engulfing an outside bar actually, while making the reversal a success. So this line is important, and the order block below, which we should mark as well as being, it is part of a quasi, yes. So let's go to the H2. H2, we have two areas. Oh, I like this. I like this a lot. There is an H2 entry and another one here. All right. That means that we can mark this as an area of interest. Right, and this is how wide. It's only about 10. That's perfectly fine. And we have another structure here. If and when price comes back, we want to be uh, mindful of it. All right, so we have that. Those are the two areas that I'm interested on GU, and we want to be watching when the market comes back to this level, which is the upper border of the daily. So let's mark it with an orange line. So we have the upper border, which can be good for reactions, for scalps, for little trades. And then we have the actual quasi entry order blocks on the H2, which gives us two nice area. And yeah, I think that's the best one. I wouldn't go to the 5 minutes. So actually, I would want to wait for price to come back to this area, see on the lower time frame if we get reactions and reversal patterns on the lower time frames. Those are the areas that I would be looking for, and probably depending on the time of the day, also the reaction that comes off from the order block, the upper border of that order block. Awesome, I like that. But not that's not for now, but maybe later today, that could be a great area to be trading. The daily, we still have the same on. On EU, we still have the same areas that are being retested, which is way not being retested right now, but there are the area of interest one below us and the current area we are in. If we can manage to have the reversal, then let's see, we have an area here where price on the lower time frame, I would be looking for the reaction we have on the 15-minute, the 5 minute, to indicate that we are ready to continue move higher. And if not, it's not a prediction, but if the market breaks it, that's right away tells you that the next level is the one you should be looking for, which is way lower, right? So once that happens, I would be same as Samir said. I would switch. I would switch to go short, looking for a short, either below this area for a breakdown trade, or the market coming back perhaps to retest. If it breaks this, I would want to wait for price to come back, then to get my short, perhaps something like this, into the area that I know is likely to happen, which is much lower, which is at about 116.36 4. So basically, all right. So we are getting some reaction, but it's not from the area of interest. So that's something I can't trade. I cannot trade. I just have to wait. It's a waiting game, as my wise friend Samir said.
All right. Let's see now.
We have the monkey asking for EU repeatedly. The monkey. Um, how are you doing? Thank you for coming in. We appreciate your presence. However, as we have indicated, if you put on the same message over and over again, my friend, you're walking a thin line of being banned, being paused, being timed out. We don't want that for you. So please, you know, just say it once, and we will in time go through the chat and check for your messages. Otherwise, you might not be able to say anything anymore. uh, I am not in the trade. If the question was asked to me, am I in the trade here? No, because it hasn't triggered me in. But I mean, the setup is valid. We have the levels being retested. Let me check on the 5 minute. We don't have any structure here. Remember, we had an area here, right? A range which has expanded to the upside on the lower time frame, but it's on the 5 minutes only a wick, so it hasn't really broken it, and only a wick on the downside as well. So that tells you actually something. The market is why is the market waitful? It should be impulsive. We just had the news come out. Where's that? Where's that um, uh, follow through movement. We're not seeing that. Look, this is the range, the initial range, and it still hasn't been able to close outside of it, right? These are the levels. So it's playing with the buyers and the sellers, tricking them into trades, thinking it's going to be a breakout or a breakdown, but it's not really doing anything. So the jury is still out whether we're going to get that follow through movement or not. We should, but it doesn't happen all the time. Sometimes it just fizzles away and breaks the initial level where it ignited from. So we'll have to see. Don't get caught up in the range if you're a trend follower trader. Wait for proper break of the structure and continuation and confirmation so you get in. Otherwise, you'd be going long here only to be perhaps stopped out down here, going short here to be stopped out on the other side, and so on. You don't want to be that kind of liquidity to the rest of us, or maybe you want to. I don't know. Maybe you do. I don't think so. Um, I don't want your account to be liquidated, my friend. So please do not be be not be
Yeah, just stick to one
against.
trade a day.
Yes, yes, indeed. More news on 3 p.m. Is that so? Actually, we hit that mark already. What news are we talking about? There is some news, but is it? It's not high impact, right? It's
It's the orange
new home
folder,
sales.
and some folders are yellow. It's not really gonna do
Yeah.
much to US pairs.
Um, new home sales. I think I see there, but it
I
doesn't
don't see
say
anything.
the time. Yeah, I don't know. I don't see any high impact news release pending. So I would say, yeah, maybe you're watching a different calendar that I'm unaware of. But at least the market isn't telling us anything. The market is not reacting. If there is a news here at this, let me look at the 1 minute. If there is a news there, well, there wasn't much of a reaction. So we'll have to wait for for what's going to be what's happening. I would be waiting for these structures to be hit, right, and then look for a possible reversal, either the 15 alone or when it gets to the 5 as well. That's quite tight, I know, but the good thing is keeping things tight will allow you to have a huge win rate. I mean, a huge risk reward ratio, because you can have your stops below the area. It doesn't have to be 12 pips. It can be 10 pips, or even less if you feel adventurous today. But we are at the end of the stream. Do we have any burning questions before we close the stream, Samir?
Yeah, that is it. I always end up with one same thing. I'm gonna repeat that same thing until you guys follow that, which is one trade a day, one session, one or two pairs. That is it. I think you don't need. I think you don't need anything else in markets. Just follow this thing, and I think you will be successful. You will be passing challenges. And if you are from India, I will personally come to you on the behalf of the fivers, and we will do interview with you, because I think this thing can literally change everything. I hope you take this advice seriously. With that being said, guys, thank you for everything, for your support, and take care. I'll see you tomorrow.
Wow, that's some incentive to pass some challenges and get some payout. Having
Yeah,
the very own Samir from the Fivers coming to you in your city and interviewing you. That's
yeah, exactly.
amazing. I want to live in India now.
Yeah.
All right, this is the Fivers, the live trader room coming to you obviously live. We are real traders showing real price action on the fly for you to benefit from, have exposure to actual, not furros, but actual traders who are uh, profitable and consistently doing so in the market. We're not perfect. Samir is very open about, for example, how he lost an account, and I feel proud of him for doing so, because and that's exactly what we want. We want to show the real thing. Trading, it's not being perfect necessarily. It's about working on yourself, becoming better, and losing is part of the game. That's normal. That's completely normal. Even losing an account, that could be, depending on how routine is, and your risk management, that could be accommodated. That can be accommodated in a risk management and in a routine, and still have a consistency over a longer period of time, right? And that's what Samir and the rest of the hosts on the Fivers is bringing to you, is real traders with real with real skills. Hopefully you're learning a lot. Please come back to our show or our stream. Our next episode will be tomorrow, same time, same place. Don't forget the like button. It will show love back to you if you click it, and subscribe to the channel as well. That's it for us. We have a workshop on you on the Discord, not YouTube, Discord as well. So you don't want to miss that. Get your account and be part of our tribe, the Fivers, the best prop firm out there. Uh, don't believe me? Just check the feedback and you'll see. All right, that's it for us. Have a wonderful day, and practice sound risk management. See you.
Yeah,
Bye bye.
definitely. Take care. Bye bye, guys.